if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution, because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forest on the land, that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission: track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your Green in Brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at a regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
Concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in the case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, E-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so we made it to Hump Day, and I got to tell you, there's a heap of news today.
There is.
Cool.
Also, what's going on with the markets? Quite a different tune than yesterday.
If you fell asleep, slept through yesterday, you'd be like, what tech sell-off?
Yeah, that's true.
We're going to talk about tech. We've got a really great theme of technology going on. Scott Galloway is going to be back with us. He wrote the book, The Four. It was all about the big tech players, Amazon, Apple, Google, you name it. We're going to see what he has to say about today's environment. We've got news on Facebook. We've got news on Apple, so we're going to get to it.
Yeah, we're also talking to Brad Stone. He is the author of Amazon Unbound, Jeff Bezos, and the Invention of a Global Empire. Looking forward to that one, too.
I was reading an excerpt from this book. I did not want to stop.
Fantastic. It's so good.
All right, it is the cover story of the magazine this week, so much to get through, but let's get you started with where we are in the trading day. Here is Charlie Pellet.
We are higher across the board. Happy Wednesday to you both. You mentioned Amazon shares lower now by 0.9%. Apple is up 1.1%. Facebook, after that decision this morning, Facebook now lower by 0.6%. Bottom line here, as you were alluding to, what a rebound, a Wednesday rebound today with the Dow, the S&P, NASDAQ 100 index, and now the Russell 2000 all higher. Stocks rebounding from that rout that was sparked by inflation worries as strong data and earnings signal the economy is growing rapidly. General Motors, for example, up today by 3.6%. S&P climbing a day after comments from Treasury Secretary Janet Yellen on rates briefly rattled markets. Right now, the S&P up 15, up 0.4. The Dow up 156, up 0.5%. NASDAQ up 35, a gain of 0.3%. 10-year yield 1.58%. Gold up $5 the ounce at $17.83. That's a gain of 0.3. And a retreat for West Texas Intermediate crude down 0.5%, 65.35 a barrel. Got to mention Peloton briefly. Peloton shares plunging now by 14.3%. Peloton Interactive recalling its treadmill products. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Well, it certainly is. Thank you, Charlie Pellet. Bloomberg Business Week is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more.
All right, it is time now for the Market Drivers Report. And let's set that Business Week agenda on this Wednesday. Dave Wilson with us, stocks editor at Bloomberg News in our Bloomberg News Bureau here in New York City. So, Dave Wilson, you know, if you blinked, fell asleep yesterday, were down and out, didn't wake up, you'd be like, what tech sell-off?
Yeah, absolutely. And, you look at today, though, it's really sort of more of a mixed bag because, you look at the biggest technology-related companies, and it's not like they're all moving as a group. I mean, you got Apple up 1%, but you have Amazon down 1%. You have Google's owner Alphabet up 0.6%, but you have Facebook down 0.7%. So, they're not really kind of dictating the market's direction the way that they have tended to do lately. And in terms of today's performance, it's the commodity producers that are really at the forefront. Energy and materials, the best performers on the day among the 11 main industry groups in the S&P 500. And it's the interest rate sensitive areas, utilities and real estate that are, shall we say, the biggest drag on the S&P 500 at the moment.
So what's the different narrative today, Dave, versus yesterday and what happened yesterday? And certainly after the market closed, Yellen came out and clarified her comments about rates and inflation. But what else is different today?
Well, it looks like one of those days, Tim, where things are being more driven by company stories, by earnings for the most part. I mean, you look at the best performers in the S&P 500, you see Under Armour right at the top twice because this is a company with two classes of shares in the S&P 500. The athletic wear maker's first quarter profit was more than 4 times the average analyst estimate in a Bloomberg survey. And then you see the likes of Caesars and T-Mobile US and Borg Warner, all well received in terms of their latest quarterly results. And on the other side of the coin, I mean, AmerisourceBergen kind of jumps out, the drug distributor, because their numbers did not go over well. They had revenue that trailed the average estimate for the first time in 5 quarters. So you're looking at a stock there that's down 5.5%. You look at its peers, McKesson, Cardinal Health, also lower by more than 2%. So it looks like much more of kind of an earnings-driven day for individual companies as opposed to some of the bigger themes playing out in the broader market.
Right, and people looking at fundamentals. Take Peloton down. Charlie mentioned 15% here today. You know, there are concerns about its products, you know, and so, Tim, we're seeing that trade play out.
Yeah, we are. And, of course, the recall, the tread recall not helping that at all. Talk a little bit, Dave, about what you see with the economic data that we got this morning, because there was this kind of mixed bag with the ADP employment coming in below expectations. Does that throw water on the idea that the recovery is where we thought it was?
Not necessarily. I mean, you know, it's one data point that's part of sort of a bigger picture when it comes to employment. So, you know, don't forget, we're a couple of days away from having the jobless numbers for April. So, you know, clearly people kind of looking ahead to that set of figures. And, you know, in terms of really kind of figuring out where the job situation is, that's going to matter more than anything else. I mean, I saw one sort of piece of information that roughly half of the economists we've surveyed here at Bloomberg are looking for growth of 1 million jobs or more for last month.
Wow.
So that's really going to get people's attention.
Yeah, absolutely. But let's, you know, as Tim and I keep reminding our audience, in perspective, thanks to our guests, thanks to Bloomberg Economics, you know, in that we need multiple months of 1 million per month job gains to work off those that are all out of work. And I do think it's fair to say that maybe this will happen, you know, fairly quickly, but it will still take a few months. And it also depends on demand and how comfortable companies feel about the outlook. They're not going to bring back workers unless they think that demand is going to be sustainable.
Right. And then the bigger question is, what's the cost going to be to companies? Are they going to have to pay up if they really want to bring workers back? You know, that becomes an issue in terms of inflation. I mean, so much focus, especially with the first quarter results, has been on sort of the cost side of inflation. But then you have wages as part of that mix as well. And so we'll see, you know, as things unfold, you know, to what extent people getting paid more points to a faster pace of price increases.
All right, good stuff. Dave Wilson's going to be back a little bit later on with his chart of the day. Headline crossing: GameStop Corporation upgraded to B from B- by S&P, outlook stable. So talk about a fundamental, right? It's not just Reddit traders.
It's not just. You have to remember that about GameStop.
Just Robin.
But so much of what we associate with GameStop is like divorced from fundamentals. So
I just think it's funny. The stock, I think, is up too. Let me just do a quick check here. I think it was up a little bit, maybe a little bit on that news here, but nonetheless watching that. Let's talk about the show, because we have an incredible show coming up.
Yeah, Scott Galloway, as you mentioned, is back with us. We're also talking to Brad Stone. It is the cover story of this week's edition of Bloomberg Business Week. Amazon Unbound, Jeff Bezos and the Invention of a Global Empire. It is Brad Stone's new book, and the excerpt is in this week's magazine. I could not put it down.
Totally agree. Read the excerpt. Cannot wait to read more, but you had me at Scott Galloway.
That's going to be a fun
You kind of went through that pretty quickly.
I did. Well, you know, people listen to his podcast. He's going to have a new show on Quick Take with us.
He is Prof G, right?
Yeah, Prof G.
And what's interesting is, listen, he wrote about the big four. He wrote about Apple, Amazon, you know, about 4 years ago, really looking at these companies, their dominance and their impact on our society. So curious to see what he has to say about them today, especially when you've got the news from Facebook about President Trump. We've got the Apple trial going on versus Fortnite, Epic, of course. So see what he has to say about that.
Yeah, looking forward to that one. We're also talking about Bill Gates and Melinda Gates and their divorce, the future of the $145 billion fortune, which so much of is wrapped up inside the Bill and Melinda Gates Foundation, the largest philanthropy in the world.
Yeah, exactly. We're talking, it's a company's, you know, it's going to impact company investments, charitable giving. So we're going to talk about that. And then, of course, we've got Uber earnings after the bell. Let's do the bite of the day.
The Bloomberg Business Week bite of the day is one number that tells us a lot, and it's brought to you by GEP. GEP helps businesses transform supply chains with strategy, managed services, and AI-based cloud-native software. Learn more at GEP.com.
This caught my attention. Today's number, 3.6 million U.S. births dropped 4% last year from 2019 to the lowest since 1979. The 3.6 million births mark the sixth annual drop in a row, and it will probably continue this year. Births fell for women in all age groups between 15 and 40, and declines were steeper in states where COVID hit the hardest, such as California and New York. Age groups starting at 15, that always kind of like stops me.
I think it's not surprising that they fell during the year of COVID, but the fact that it fell for a sixth year in a row is certainly concerning. Huge economic implications, and Biden administration is working on making childcare more affordable.
Yeah, I'm also curious, though, about baby births in
Yeah,
2020,
same.
whether there's a little boom. All right, let's get to world and national news. Nancy Lyons in D.C. Hey, Nance.
Hey, Carol, it's no for now. Former President Trump will not be allowed back on Facebook. Today, the social network's quasi-independent oversight board voted to uphold the ban from the platform after his account was suspended 4 months ago for inciting violence that led to the deadly January 6th Capitol riot. While upholding the suspension, the board faulted Facebook, though, for the way it made the decision, calling it not appropriate to suspend him indefinitely. The board says Facebook has 6 months to re-examine what it calls an arbitrary penalty. Well, vaccine supply in the U.S. is starting to outweigh demand. So now President Biden is shifting to vaccine diplomacy, something that competitors like China, India, and Russia have been engaged in for months. We get more on that from Bloomberg's government reporter Emily Wilkins.
They are planning on sending several million more shots to various countries. There are agreements that the U.S. has with nations, including, Australia. They're certainly focused on India, where we are seeing just record numbers of cases coming out of the country.
At the same time, President Biden is pushing for 70% of U.S. adults to have at least one shot by the 4th of July. Employers are growing concerned about the lingering after effects of the pandemic.
As Americans slowly return to the office, companies are braced for a wave of mental health cases brought on by the pandemic. Masks, plexiglass, and empty conference rooms await workers. And experts at the American Psychological Association say people's minds and bodies have changed in the past year. 61% of adults reported gaining weight during COVID-19 lockdowns, and rates of depression, suicide, and drinking have all risen.
That's Ann Cates reporting.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. What were you just asking me? Chunks, drunks, and
we're having
hunks?
Dr. Ian Lusbader's coming on a little later, and he told us chunks, drunks, and hunks. Yeah, that's what he said when talking about the way that people treated themselves during the pandemic.
Yeah, absolutely. I mean, it definitely, I'm not sure which ones I tick. Okay, so let's get to some of the stories. This one I tweeted out this morning. It's about the world's most vaccinated nation activating curbs as cases rise. We're talking about the Seashells.
Yeah, the Seashells have fully vaccinated 62.2% of its population, but it has closed schools and canceled sporting activities for 2 weeks because infections there are surging. It's vaccinated more of its population against the coronavirus than any other country. There are some important caveats here, though, and that has to do with the actual type of vaccine.
Right. You say Seashells. I say Seashells. You say Seychelles.
I've never
That's
been.
the way. I think
I've
it's
never
Seychelles. You are absolutely right. They fully vaccinated more than 60% of its adult population with 2 doses of coronavirus vaccines. The curbs that they're doing are similar to those last imposed at the end of 2020. And listen, they've got a population of about 98,000. They're dependent on tourism for much of its foreign exchange and acted quickly to begin vaccinations back in January using a donation of Chinese vaccine from the UAE. And listen, by April, 59% of the doses administered were some of those Chinese vaccines. But what's interesting is this is kind of a great case study as we rush to vaccinate as much of our population, really of our world, but how you can still end up in lockdown.
Yeah, it's a different story certainly playing out in Israel, where the country primarily used the Pfizer shot there. There are some other stories making waves when it comes to vaccine. Here in New York City, Yankees, Mets are planning to segregate unvaccinated spectators, so they are going to seat them in different areas, Carol.
Yeah, those who are vaccinated can sit together at 100% capacity as long as they wear masks. The unvaccinated fans will need to wear masks and also observe a 6-foot social distancing rule, which works out to about 33% capacity.
That makes sense if they have to actually do different things. But I wonder if that will be something that prompts people to get vaccinated.
Yeah, and then, of course, we're going to get into a little bit deeper about what companies might require if you're coming back to work. This is Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters, I'm Charlie Pellet. The Dow, the S&P, NASDAQ, Russell 2000, NASDAQ 100, all moving higher. Stocks rebounding from that sell-off yesterday, sparked by inflation worries, as solid data signals that economic growth is picking up. Also, earnings out this morning from General Motors, GM up now by 4.1%. S&P up 15, a gain of 0.4%. The Dow up 170, up 0.5. NASDAQ up 20, that is a gain of about 0.1%. We've got the 10-year yield, 1.58%. Gold up $5 the ounce to $17.84, up 0.3%. West Texas Intermediate crude down 0.2%, 65.56 a barrel on WTI. So it is an up day. Honest Company shares surging. That's the personal care products brand, co-founded by actress Jessica Alba, jumping right now in its first day of trading. Honest, HNST on the ticker, up now by 41. ST on the ticker, up now by 41.1%. After the bell, earnings from Fox Corp, Zynga, Allstate, and Etsy. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much, Charlie, for that update. You're listening to Bloomberg Business Week. Carol Massar, Tim Stanovic in our Interactive Brokers studio. So U.S. COVID-19 cases could see a sharp decline by July if nationwide vaccination efforts continue to be successful. This was according to the CDC. President Biden talking about children being vaccinated. Tim and I covered that yesterday. And not only getting the vaccine out to underserved communities here in the U.S., but also around the world.
Yeah, and we're also seeing companies and businesses, organizations start to do different things when it comes to people who are vaccinated or not vaccinated. As we mentioned just a few minutes ago, baseball stadiums here in New York City are going to segregate those who have and have not been vaccinated.
Right, we're figuring it out. All right, so and kind of in a world that maybe there's going to be a couple different tracks. Let's get to it, though, with our daily check on COVID. Coming to us a few days earlier this week, Dr. Ian Lustbader, clinical professor of medicine at NYU Langone, on the phone in New York City. Ian, good to have you back with us. How are you?
Good. Always a pleasure, Carol and Tim. Hope you guys are well.
We're doing okay. We're feeling, I think, optimistic. It's safe to say, right, Tim?
Yeah, we are. You know, it's funny. We just had this conversation before we came to you, Dr. Lustbader, about comfort in doing things that we did before the pandemic. And, you know, I have been driving into work, but I want to start taking the subway again. And I'm wondering, like, how we should feel about those types of things, wearing a mask, of course, and being 2 weeks out from that second shot.
Sure. I think you should feel more confident. I've been on the subway and watched it go from literally deserted, maybe a few homeless people, to really quite crowded. So you do need to be a little prepared for possibly having people sitting next to you a little under 6 feet. So do not expect ideal circumstances, whether it's at the ball field or at the restaurant. But I do think if people have had their 2 vaccines and they've waited 2 weeks, based on what we're seeing, it's much more reassuring, and I think America, unlike other parts of the world, should really, by the summer, really be able to return to a much more normal lifestyle, again, barring any new changes, such as appearance of variants that are resistant and so forth. We've really done a pretty good job at getting towards, we're not quite at herd immunity, but we're certainly getting very close to it. And I think that is all really according to plan and going fairly well.
How do getting kids vaccinated, we heard the president talk about that, waiting for FDA approval on that, but how do getting kids vaccinated, Dr. Lustbader, get us towards that herd immunity?
Well, I think getting kids vaccinated makes a lot of sense. You know, certainly initially, we want to wait for safety data, but kids get many vaccines, mumps, measles, rubella, hepatitis B, long before they're going to be exposed to it. And even though kids generally do very well, in other words, if they do get COVID, they bounce back very well, we are seeing some evidence that maybe early COVID exposure may predispose to diabetes or other longer-term problems that we are not, you know, that are just beginning to appear. So I think not only does vaccinating children make sense to reduce transmission to older adults, but it may protect the kids from further complications from COVID-19 that we're just beginning to see on the horizon.
Do you expect that a vaccine will be approved for children ages 2 and up by the end of this year?
I think think by the end of this year, that's quite likely. I think that is reasonable. Again, it's not an absolute rush because it's not like kids are the most vulnerable. But I think we want to wait for the studies and safety data. Of course. And I do think by the end of the year that should be out. And I think it will become, at least for the next few years, part of a routine vaccination schedule, until we really have eliminated worldwide the pandemic, which may take more than a year or two to work its way through, unfortunately.
So new U.S. guidance for children at summer camps is, quote, stringent. And we heard that from Anthony Fauci, of course, the top White House medical advisor, saying today, suggesting the rules may be loosened as new data comes in. Would you send kids to summer camp? Would you send your kids to summer camp, or if they were of that age today?
I would feel happier if they were vaccinated. I think there's a certain benefit to exercise, fresh air, outdoor activities, and I think that can be done in a safe way, and I think the benefits of school and camp in a safe environment far outweigh the potential low risk of a significant complication from COVID. So I think on balance, everything's a risk, but I think getting kids out and socially interacting and learning and all of those benefits, I think, far outweigh the very small risk of actually getting COVID over the summer.
What are the biggest questions that you're getting from patients right now about what they can and can't do in the rest of the year for the summer?
Unfortunately, there's been a lot of conflicting data, and I think people really are confused about, do they have to wear masks? Should they not wear masks? And so what I tell my patients may not be what everyone tells their patients. I certainly feel that outdoors, there's really a minimal risk. If you've been vaccinated, there is no reason to wear a mask outside. I mean, we do see that influenza and other respiratory diseases are much lower this year, so there is some rationale, and if you want to wear a mask, that's fine, but there's really no evidence that you're going to get COVID if you're socializing, not too close, outdoors. I think indoors, if it's your group and your pod and people have been vaccinated, I also think that's a relatively safe environment. And I think if corporations, for example, say, if you can prove you've been vaccinated, come back to the office. Many people miss the office socially, but also from a productivity point of view. I also understand people reluctant to go back. And really what I tell them is, you may be reluctant, but if you've been vaccinated, there's no scientific evidence why you cannot go back to the office.
I feel like Captain America with my vaccines.
I do too. I feel like a different person.
Mrs. America, Ms. America, I don't know, something.
I feel it too.
I really do.
It feels really good.
It does. Great to come back with Dr. Ian Lustbader, clinical professor of medicine at NYU Langone. I want to ask him now about a story on the terminal about people coming back, though, and mental illness.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So one of the stories I want to get to with Dr. Ian Lustbader over at NYU Langone is no vaccine, no desk. Firms weighing whether to make shots mandatory. I mean, we are seeing a reopening. Yeah. We're seeing it certainly at our office, but a lot of places around New York City.
And it's one thing for a healthcare, provider or hospital to do it, but I don't see it happening at other companies. I wonder if that changes too when the emergency use authorization goes away and it's actually approved by the FDA.
Right, exactly. I wonder if people think about it differently. All right, we'll get back to Dr. Lustbader in a sec. Hey, let's get back to Charlie Pellet, see where we are in today's trade. Hey, Charlie.
High of the day right now for the Dow Jones Industrial Average. Carol, we're looking at the Dow, the S&P, NASDAQ, all advancing right now. Right to the numbers, we'll give you the wine. Got to begin with the Russell 2000 rebound there. Russell 2000 up now by 0.2%. Dow Transports advancing by 0.7%. NASDAQ 100 index up 0.2%. NASDAQ Composite Index up 0.1%. Bottom line here, big rebound from yesterday. S&P advancing 16, up 0.4. NASDAQ, by the way, up 17. The Dow up 183 now, up by 0.5%. 10-year yield 1.58%. Rebound the theme following yesterday's sell-off sparked by inflation worries. Solid data today signaling that economic growth is picking up. Look at General Motors up today by 4.1%. S&P advancing a day after comments from Treasury Secretary Janet Yellen on rates briefly rattled markets. Again, the 10-year right now 1.58%. Gold up 0.3, 17.84 the ounce. West Texas Intermediate crude down 0.2%, 65.56 for a barrel of West Texas Intermediate crude. Canada has become the first nation to clear the Pfizer-BioNTech coronavirus vaccine for adolescents. And White House Chief Medical Advisor Anthony Fauci says the U.S. is expected to take similar action within several days. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health, and she says brands are going to play a major role in getting undecided adults to eventually get their shots.
I think as we think about how we market towards people who are not getting vaccinated, places where we don't have that uptake, we think about the brands they trust, and we think about linking those brands that they trust with people that they trust. So if you can put a trusted communicator with a trusted brand and show the safety data, show how really effective and really safe we're seeing these vaccines are, it could potentially be a huge push forward.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among the vaccine names that we track on a regular basis, Pfizer up 1.8%, BioNTech, its German partner, the ADRs up by 6.6%, ADRs of AstraZeneca higher by 1.1%, Moderna, based in Cambridge, up right now by 2.6%, a down day for Johnson & Johnson, tumbling by 0.3%. Recapping equities higher with the S&P up 17, up 0.4. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. Let's get right back to it with Dr. Ian Lustbader, clinical professor of medicine at NYU Langone Medical Center. He joins us on the phone from New York City. Dr. Lustbader, to the point of what Charlie was talking about, the relationship that companies have with their workers, to what extent they play in the inoculation process, and a survey from April by Arizona State University and the Rockefeller Foundation found that 65% of companies in North America plan to offer vaccine incentives to workers. 87% would inoculate workers at company facilities, but also that 44% of these companies would require vaccinations for workers. A third of the companies, I should note, plan to encourage vaccines but wouldn't require them. From your perspective, which is the right move here? Is it making it mandatory? Is it offering incentives? What do you think?
I like the incentive approach. I think making anything mandatory that is really, certainly that's not FDA approved would be challenging. But I think we need to educate and incentivize people. The more things you make mandatory, I think there's always a potential risk of pushback. We do a number of things that don't always make complete sense. For example, in many communities, children before in kindergarten or first grade have to take hepatitis B vaccine. That's a potential STD. The actual incidence of that is fairly low. Yet in many communities that's required, and they're not even going to need that for 12 years. So, or more, when people become sexually active, or possibly even longer. So I think we have to really think carefully before we make something mandatory. I think educating people, incentivizing people, reassuring people makes a lot of sense. Certainly in the healthcare community, we do have to have flu shots, really, unless we have a whole variety of effort to get an excuse when we're seeing patients. I think the COVID vaccines that we have make sense. I think they're effective. I think they're low risk. Making them mandatory, that's more of a challenge, and I would definitely try and incentivize people first.
Hey, so I've got to ask you, Dr. Lustbader, a loyal listener and someone on the Bloomberg, saying to me, okay, so what is low risk? Can you quantify it? When you say something is low risk or taking this vaccine is low risk, whether it's for adults, whether it's for kids, what is low risk in the medical world? Is it 5%, 10%? Give me an idea.
No, I think that's great. And, we often sort of hedge when we talk about this, and they sound like a loyal listener and probably have called in before, which is great. It's great to get, audience feedback.
And they like you. They like you. They just want to know, what does low risk mean?
Right. So in any individual, it's hard to state your specific risk, right? Because we don't know your underlying immune system, your underlying disease, your underlying clotting issues. But we know when we look at really now hundreds of millions of vaccines, we know the number of cases of, say, mortality, very, very low. We're talking, perhaps, 100 people out of, a couple of 100 million vaccines. And part of the other problem with that is there's some mortality that happens, and it's sometimes hard to tie someone who dies of a heart attack 2 days after a shot. Would they have died from that anyway?
Right.
So really getting some of this data down is very challenging. We also know the effectiveness, again, out of a few 100 million vaccines in the United States. Only about 5,000 or 6,000 people get COVID, so we know it's quite effective. So when I say low risk, we're talking certainly in single percentages of complications. If you're that 1% or 2% who develops fever or Guillain-Barré, which is a paralytic condition, but we see that with a flu shot. We see that with other vaccines, and sometimes we see it even unrelated to a vaccine. So I think all we can say is we are not seeing a real predominance or worrisome numbers that would say, hey, this is a dangerous shot. But unfortunately for an individual, it's very hard to say what one person's specific risk is.
All right, but you gave us some guidelines, which is good to know that it's under 10%, like it's a low single, percentage rate. Did you have another question?
Well, no, I just think, from my own experience, it's just changed a lot about how I feel about what's safe and what's not.
Yeah. Oh, absolutely. And I think the more specific we can be, we can kind of understand exactly what we're dealing with. Dr. Ian Lustbader, have a good rest of the week. I really appreciate it. Clinical professor of medicine at NYU Langone Medical Center on the phone in New York.
Well, let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. In an effort to increase access to COVID-19 vaccines, the federal departments of health and housing are teaming up with community health centers. HUD Secretary Marcia Fudge says it's a way to reach underserved communities.
We're hopeful that by using community health centers to get into our public housing and to get people the vaccine right where they live is something that is going to be helpful.
Fudge made the announcement while touring a Washington, D.C. health center. Former President Trump will not be getting back on Facebook. The social network's independent oversight board has upheld his indefinite suspension, saying even that didn't go far enough after the January 6th Capitol riot. We get more from Bloomberg tech and lobbying reporter Anna Edgerton.
What's really different about Trump's case, if you hear Facebook tell it, is that he has such control over his followers and such a loyal devotion among so many people in the United States that his words have a real potential to spark real-world violence.
The oversight board says Facebook should not have kicked Trump off indefinitely without criteria for when or whether he'd be let back on. The panel is giving Facebook 6 months to decide the former president's status. Well, Dale Earnhardt Jr. is returning to racing in a 9/11 tribute car. The fan favorite will race 20 years to the day of the 9/11 attacks in a car that pays tribute to the people who died and the heroes of the day. The car's paint job also acknowledges frontline workers helping with the fight against COVID. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. So do want to get to the story. We didn't get to it with Dr. Lustbader, but it is among a story that we're talking about here in the Bloomberg newsroom. And it talks about we're seeing more people come back to work, and employers are bracing for COVID mental health fallout as a lot of their staff comes back.
One thing that we've talked a lot about are, we focus so much on the numbers of cases and deaths here in the U.S. and around the world, but we don't necessarily know the unintended consequences of what this last year has been.
Mm-hmm.
We don't know what it means for mental health. We don't know what it means for people who have put off seeing regular doctors and doctor appointments because they were nervous about going, and what that means for their conditions. And I think this is a big one, the idea of people being so isolated over the last year plus.
Isolated, or maybe they've been taking care of parents or elderly members of their family. Maybe they've lost members of their family at all ages. Isolation, sorrow. It's just been a year. If you could, I think about people who study psychology. I have a sister who studied psychology. Like, this has been this grand, unfortunate, grand scale experiment of people, living and working very differently.
There's some disturbing data, and Dr. Lustbader has talked about it with us in the past, the idea that some people have gained weight during the pandemic. Some 61% of adults are reporting undesired weight gain or loss, though mostly the former, with a typical increase of 15 pounds. That's according to APA data.
Right, and rates of depression, anxiety, substance abuse, and use, and suicides really have all increased as well. We've seen that certainly go up here. So it's going to be interesting, and I also think you and I have talked about it together and also with some of our guests, that I think it's fair to say that employees are looking at their employer as something more than just an employer, because employers have, made sure a lot of folks have had medical care, have in some ways taken care of employees in different ways over this past year. Unprecedented way, perhaps.
Early on in the pandemic, so much of the focus was on healthcare workers and frontline workers who were on the front lines when we were all at home.
Right.
Those people who were getting us the stuff that we needed.
Showing up at work.
And I think the conversation is starting to shift as different people are going back to work.
Yeah, and I hope that on the other side we continue talking about mental well-being and dealing with it. This is Bloomberg.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Dow's at a record. Stocks are climbing after strong economic data. S&P, NASDAQ, Russell 2000, Dow Transports, NASDAQ 100, all advancing right to the numbers. S&P up now by 16, a gain of 0.4%. The Dow is up 183, up 0.5%. Could see a record close there. NASDAQ up 20, a gain of about 0.1%. Russell 2000 up 0.1%. NASDAQ 100 index up 0.2%. Dow Transport's up 0.7. 10-year yield 1.58%. Gold up 0.3, $17.84 the ounce. And a pullback for West Texas Intermediate crude down 0.3%, $65.51 a barrel. Stocks climbed with solid corporate earnings. GM, for example, up 4.2%. And economic reports signaling growth is picking up, with Fed officials playing down concern over higher inflation. Again, 10-year yield 1.58%, S&P up 0.4%. A recall at Peloton Interactive, shares plunging 14%. After the bell, we will be hearing from Fox Corp, Zynga, Allstate, and Etsy. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So Bloomberg's Brad Stone is no doubt about the go-to voice when it comes to Amazon. Wrote a book about the company. You might recall The Everything Store. Lucky for us, he went back to do more, resulting in his new book, just coming out, Amazon Unbound, Jeff Bezos and the Invention of a Global Empire. Been looking forward to this chat for all week, or actually for weeks. Let's get more from Brad Stone, Senior Executive Editor of Global Technology here at Bloomberg News. He is with us from our bureau in San Francisco, along with Bloomberg Business Week Editor Joel Weber. And I got to tell you, you guys, I think we're just going to do this for 10 hours because I just want to talk about everything Jeff Bezos and everything Brad's book. I'm just going to put that out there, Joel.
I don't know if we can have Brad. I don't know if we can have Brad for 10 hours, but we'll take him for what we get.
Yes.
Isn't this a family program? I don't know if we're really able to talk about the excerpt
for 10 hours. Yeah, it might be a little much.
True.
So this story, Brad, that we excerpted from your book is one that kind of broke the internet when it happened, but we only really knew the part that came out at the moment. And what you brought to the book and to the pages of Business Week is a lot of color behind the scenes and the great untold story of how Jeff Bezos basically took probably what was a low moment in his life and used it to turn the tables. And we're talking about the National Enquirer story that was basically about his affair. So how did you approach writing this story, and then how does that tie into the book itself?
Right. Yeah. Thanks, Joel. Well, first of all, just to put it into a little bit of context, I was about a year into writing this book, as Carol said, a sequel to The Everything Store, which I thought was going to be a nice, boring business book about the last 10 years and the continued rise and domination of Amazon, with a little, ominous antitrust specter hanging over it. And then Jeff tweets his divorce from McKinsey and the Medium Post and the National Enquirer package. And what was left from, the moment, Joel, which you described as kind of breaking the internet, was a little bit of a sense of ambiguity. It was like, well, wait, did the brother do it? Did MBS do it? How did the Enquirer get the story? Was Trump involved? And Bezos and his advocates were very clever, I think, in casting sort of political aspersions, wrapping themselves up in the mantle of the Washington Post and the journalistic mission. And so my goal as I got into it was, to try to avoid, I guess, some of the sensationalism but describe, what happened. How did Bezos really come out on top? As the cover says, Jeff wins. He always seems to win. And what does it say about his kind of tactics? And so, I just tried to talk to everyone, get close to the investigation into the whole thing by the FBI and the Southern District of New York, and figure out, okay, what happened, and as Jeff maneuvered through it, what can we learn from that?
So what did happen? It didn't actually have anything to do with Saudi Arabia or President Trump, right?
That is the question. And what I say in the book is, and it's represented in the Business Week story this week, is that based on the evidence that we have at the current moment, and based on the conclusions of federal prosecutors in New York, that it seems like Occam's razor applies here. The simplest solution was the right one, which is that the brother Michael Sanchez gave the story to the National Enquirer, and there's really no evidence to suggest that there were any political motives involved. Or that any international conspiracy was involved. There is, I wouldn't say there's evidence. I would say there's circumstantial evidence that MBS hacked Bezos's phone. But there are a lot of questions about the FTI, the agency that did that investigation, that Bezos's camp hired to do that investigation. The spyware that was involved is very, very hard to detect. So really, they were looking at the increase in data that came from his phone at the time. And there's no evidence, and there's a lot of evidence to the contrary. There are sworn statements that were filed in part of these cases, and there was evidence, email evidence, that shows the Enquirer getting the story from Michael Sanchez and trying to piece together the mystery. Who was he even talking about? Discovering it was Jeff Bezos. And so, where I netted out, again, maybe something comes out that this story's so bizarre, who knows what could happen. But from the evidence we have, it really doesn't seem like there were political winds blowing around this thing at all, other than the fear that AMI had that because of its, if the resolution of the Michael Cohen case and its peace treaty with the Southern District of New York, they worried about being accused of having political motives. And that did play a role because it forced him into trying to negotiate a settlement, which Bezos then accused them of extorting him. But other than that, I think all that stuff was just noise.
I think what's remarkable is that I can just imagine the PR team behind it saying, no, Jeff, don't say anything or whatever, or deny it. And he just comes out, fighting really hard. And as the cover says, he wins. It's just remarkable, Brad.
And the question, Carol, is was it, and I don't know the answer to this, but was he deliberately manipulating kind of the world, wrapping himself up, as I said, in the mantle of the Washington Post, imputing political motives to the Enquirer? Was that a deliberate and somewhat disingenuous defensive shield, or did they really think that there could have been this political or international conspiracy? I tend to think that they genuinely thought that maybe his enemies, and he does have enemies, and the Washington Post, particularly during the age of Trump, made a lot of enemies. I think they genuinely thought that there might be more to it, but you have to look back and nod your head. It was super effective, right? When you think about sort of what he did and the personal sort of trajectory there, people ended up sympathizing with him. He took a stand and he brought down the editor, Dylan Howard, of the National Enquirer. So it was super effective.
Brad, what is this episode? What do you feel like it illuminates about Jeff Bezos as a business person?
And Jeff just got about 40 seconds or so left.
Brad.
Yeah.
Sorry, what did I say?
Feel free to confuse us. It happens all the time.
I'm sorry.
Joel, I just quickly go back to when the Everything Store came out. And do you remember they didn't like the book and they gave me a bunch of 1-star reviews. And Mackenzie left one at the time. And what struck me there is, wow, he found a totally unique way, thinking outside the box, to try to throw an asterisk next to that work. And I frankly, I don't think it was effective. But that's also what he did in this case. He thought outside the box, outmaneuvered everyone, came up with this direct medium post, won the sympathies, came out on top. He's retiring now as an icon of business. The thing that you learn from this is he always does things a little bit differently, and often it is ingenious.
All right, well, our thanks to Brad Stone, a.k.a. Jeff Bezos. Sorry, you got me so immersed in this. I just lost myself. It's incredible. Wish you great luck with it. And it's the cover of the magazine this week. Brad Stone, Senior Executive Editor of Global Tech. Check out his book, The Untold Story of How Jeff Bezos Beat the Tabloids. It's incredible. And, of course, our thanks to Joel Weber, Bloomberg Business Week editor, also Amazon Unbound. It's coming out. This is Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. We begin with a developing story headline from the Bloomberg Professional Service as we move into the final hour of trading. The United States says it does support a waiver of vaccine patent protections at the World Trade Organization. The U.S. will support a proposal to waive intellectual property protections for COVID-19 vaccines, joining an effort to increase global supply and access to the life-saving shots as the gap between rich and poor nations widens. We're looking at an update on Wall Street. We're looking at a record for the Dow Jones Industrial Average, up 165 points right now at 34,297, up 0.5%. S&P's up 13, up 0.3. NASDAQ up 2 points, little changed, up less than 0.1%. NASDAQ 100 index holding on to a gain of 0.1%. Dow Transport's up by 0.7%. 10-year yield 1.58%. Gold up $5 the ounce, up 0.3% to 17.84. West Texas Intermediate crude down 0.4%, 65.44 for a barrel of WTI. Billionaire investor Leon Cooperman says rising inflation will force the Fed to raise rates next year. Cooperman was interviewed this morning on Bloomberg Radio and Television. He talked about a number of topics, including the economy and the cost of stimulus.
So what's really going on is very simple. Prior to the virus hitting, we had about 5.5 million people unemployed. That ballooned to 23 million people. It's now down to around 9.5 million people. And monetary and fiscal policy has been conducted in a manner to get the unemployed back down to the 5.5 million pre-COVID. And they're less concerned about the long-term issues or damage they might be creating.
Peloton Interactive recalling its treadmill products after a child died. 70 other safety incidents were reported. Peloton shares, they are plunging now by 14%. After earnings, GM up 4.3%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
You're listening to Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week, and just about 60 minutes to go until the close of trading. Top story at this hour, news hit this morning, Donald Trump remaining banned from posting on Facebook for now. The company's Independent Content Oversight Board ruling that, Tim, leaving really the former U.S. president without his most powerful tools for fundraising and, really kind of leaves him out of the kind of political conversation in a big way.
It does. The Facebook Oversight Board announcing that this morning right at 9 o'clock Wall Street time. Kurt Wagner, who's based in San Francisco, was up early and he was following every move from the company. He's technology reporter for Bloomberg News, and he joins us on the phone from San Francisco. Kurt, I sent out a tweet this morning with a poll on it. It said, is Trump going to be banned or not? What does Facebook do to Trump? Does it ban him or does it allow him back on the platform? Now I realize I should have had a third option, because this is kind of like punting it back to Facebook.
Yeah, you should have, and I guess I should have too, because I was definitely a little surprised by this decision as well. I mean, I guess the very short summary is the board basically said Facebook made the right choice on January 6th when it suspended Trump in the moment with, this riot going on. But they said that Facebook's decision to make that suspension indefinite, without any end in sight, without any kind of guidance to him on when that would come to a close, was not the right choice, because that's not something that Facebook actually has in its rules or its terms of service right now. So they're now kicking that decision back to Facebook to say, okay, we agreed with your decision to suspend him, but you can't just do it indefinitely. You got to put a timetable on this, and now it's up to Facebook to decide whether that's a permanent ban or if they're going to bring him back at some point.
And the former president coming out and calling the move a total disgrace and embarrassment to our country. He says free speech has been taken away from the president of the United States because the radical left lunatics are afraid of the truth. He said this in a statement. What's interesting, what?
He didn't say it on Twitter.
No.
And he didn't say it on Facebook.
Because he couldn't.
Exactly.
Well, and, one of your colleagues, Sarah Fryer, here at Bloomberg News, put out a column, and she said, we've got to, maybe Facebook has to expand its options on Trump. But, this is not a black and white issue. And I guess many would argue that there needs to be, if we believe in free speech, that means everyone has a voice. And so does Facebook, do other social media platforms have to figure out a way to allow these voices to be heard? Yeah,
I think Sarah had a good point in her column, and I actually agreed. I think her conclusion at the end was basically, hey, let Donald Trump back on Facebook, but don't give him the kind of way to go viral that a lot of people have. Don't let people like his stuff. Don't let people share his stuff. Like, let him post there. If you want to go seek it out, you can find it, but we're not going to use Facebook's technology to promote that necessarily to people. I thought that could potentially be a good common ground, but really, I mean, this is the same battle Facebook faces in every country they operate, right? How do you write one set of rules that applies to everyone in the world, including world leaders like, former President Trump? So I think this is a really, really challenging issue, and we didn't really get the answer this morning that maybe we had all hoped would kind of clear things up.
Kurt, what are the repercussions of this? And I mean, in Washington, D.C., what are the political repercussions of this? Because if there is something that unites Democrats and Republicans right now, it is a disdain for, quote unquote, big tech.
Well, Facebook is obviously facing some real threats of regulation at the moment. And I think the issue here is that had the board simply said, hey, his account should come down or stay up, they could kind of say, listen, we're just following the advice of this outside group. Now suddenly Facebook has to make this decision again, right? And so when they do, they're going to be held accountable for that decision in the same way that they are for all their content. And so I think if you're a Republican and they choose to leave Trump's account down, you're going to say, hey, this is censorship, this is overstepping. And if you're a liberal and they do the opposite, you're going to have issues with that as well. So I really just think this puts them right smack in the middle of their content issues.
And forgive me, just who is on that oversight board?
This is a collection of lawyers, former journalists, former politicians. It's kind of an impressive group of academics and folks who, I guess, think about this stuff in some ways for a living. But they're not Facebook employees. They're meant to be independent of Facebook, even though the company did set up this board and does actually pay them through a different fund that they have.
Well, and it's interesting, too, because we know that political social media content, I mean, this has become fairly lucrative, right, for social media platforms?
Yes and no. I mean, I think political content brings a lot of people to them, to these platforms to discuss this kind of stuff. But in terms of, political advertising money, for example, it's a very, very small part of the overall revenue that these companies make. I do think, though, if you simply said, hey, you can't talk politics on these social networks, I mean, that's just a huge part of any cultural conversation. So I feel like that is where they would be hurt more than the actual, ad revenue, for example.
So, okay, so what's the next date we're waiting? I mean, is the clock ticking once again on a decision by Facebook about whether or not he's banned forever or he gets to come back?
There is, yes. The board basically challenged Facebook to make this decision in the next 6 months. Doesn't mean that it will be 6 months from now. It just means it has to happen sometime in that next 6 months. It could happen in theory next week. My guess is that it'll take a little bit longer than that, but yes, sometime within the next 6 months, we should have a second answer to whether this account should stay up, or go back up or stay down.
So, Kurt, what's the message to everybody else who's out there? I'm thinking Twitter, I'm thinking other social media. I mean, are they just kind of watching to see how Facebook ultimately handles it, and then that they will determine their policies? Or, I just do wonder, is everybody going to act kind of as a group here?
Well, both Twitter and Snapchat have said that their bans of President Trump are permanent no matter what happens with Facebook. So we can set them aside. They've kind of put a stake in the ground and said, we're not going to change. I think, YouTube and others are probably looking closely here because you're right. I think a lot of these companies, oftentimes we see with, QAnon or with other troublemaker users, they often kind of work in unison. And there's a lot of public opinion, I think, that weighs into that. So I think whatever Facebook ultimately decides will probably set a standard of sorts for a lot of others. But again, Twitter's already banned the president no matter what. So, they've already made their decision.
It's funny because...
You're smiling.
It's funny because we all thought the story would be over, either yes or no. And then here we are, the clock is ticking 6 months, another decision.
Yeah,
it's funny.
Right?
I mean, what we've learned, President Trump's presidency is never over, apparently. It will just continue to linger. So I feel like in the world of social media, he's just got a huge tail here.
Yeah, absolutely. All right. Hey, good stuff. Kurt Wagner, technology reporter at Bloomberg News, on the phone in San Francisco.
Well, let's get down to Washington, D.C. for a check of world and national news with Nancy Lyons. Hey, Nance.
Hey, Tim. Well, President Biden says his administration is launching the Restaurant Revitalization Plan to provide $28.6 billion in direct relief to the nation's hard-hit restaurants.
Businesses that get grants can use it to cover payroll, rent, utilities, supplies, everything they need to stay open and to reopen.
Biden says the restaurant industry does need real help, having lost 2.3 million jobs during the pandemic. Dr. Anthony Fauci is suggesting that the new COVID guidance for summer camps may need some revision. Bloomberg's Nathan Hager has more from Washington.
The Centers for Disease Control issued the recommendations last week. They call for kids and adults to wear masks at all times at camp, even outdoors, even if the adults have been vaccinated. Dr. Fauci tells NBC's Today Show he wouldn't call the guidance excessive, but he says it is conservative and the CDC will be reevaluating as new data come in. The editor-in-chief of JAMA Pediatrics told New York Magazine the rules are unfairly draconian. In his words, quote, keeping children masked for activities like baseball and tennis is ridiculous. In Washington, I'm Nathan Hager, Bloomberg Radio.
The top U.S. general says the military needs to do more to improve career opportunities for Black Americans. They remain vastly underrepresented in some areas, including among Air Force pilots and in the top ranks of the military. Army General Mark Milley is chairman of the Joint Chiefs of Staff. He told a Howard University ROTC commissioning ceremony today that diversity is an important strength of the military, but he added, we must get better. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Master along with Tim Stanovic. And we mentioned this in our Bite of the Day, and we want to go back to it. It's about the U.S. birth rate.
Yeah, the U.S. births have dropped to the lowest level since 1979 amid the pandemic. The years-long baby drought worsened last year, with births dropping 4% from 2019 to the lowest level in years.
And the provisional data for 2020 at 3.6 million births marks the sixth annual drop in a row. The decline likely to continue into 2021 when the brunt of the impact from the COVID-19 pandemic will be recorded with a 9-month delay. And this is, I don't know if you remember some of the stories we were covering early on in the pandemic. Everybody's like, you know, old joke. I remember my parents talking about like the lights went out and 9 months later there was a baby boom. And I think there was some speculation that with everybody home that we would see somewhat of a baby boom. But I think because of the economic hardships and impact that I guess maybe that's not playing out.
Yeah, it's not. I think we'll have to wait till 2021 to see.
Correct.
I mean, anecdotally speaking, just talking to my friends, people were very nervous early on, March, April, May, June, about what would happen. And then suddenly, you know, I have friends who in early 2021 have already had kids, friends who are pregnant and are not taking a break from it.
And I feel like I see a lot of babies around in my neighborhood.
Yeah, but I think it's part of a bigger pattern too, Carol, that is happening in the United States and other countries as well, where it has become so expensive to raise a kid and so difficult to raise a kid with both parents working, that there is a serious problem with the decline in birth rates because it has serious economic consequences. Like, what does it mean for when I am of retired age?
Right.
And do we have a workforce that can support me with Social Security?
We talk about it now with China, that they are beginning to see, you know, a graying of their population. It happened in Japan. It's happening in the United States, where you have, you know, older folks that are going to be kind of drawing on the system rather than putting into the system. And what does that mean for economic output longer term? And so you do want to see a birth rate that is supportive of a growing economy.
Enter the American Families Plan and President Joe Biden. Part of something that he wants to do, a key part of his legislation is making child care more affordable. And I think that would provide an incentive for people to say, hey, wait a second, this is something we can afford.
Right. And these are the type of long-term statistics you keep an eye on to understand kind of longer-term trajectories when it comes to GDP and overall growth. You're listening to Bloomberg Business Week. This is Bloomberg Radio.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're looking at an update for the Dow, the S&P. It is now a down day for the NASDAQ Composite Index. We did see the Dow trading at a record, but let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks are trading mixed with NASDAQ underperforming. Dow's currently up 112 points. S&Ps are up 5. NASDAQ declines by 48. The U.S. 10-year yield at 1.58%, gold trading higher by 5, and transports gained 82 points. Among the main 11 S&P sectors, energy and the materials led. Utilities and real estate were under pressure. And leaders to the upside in the Dow Inc. and Chevron, while Boeing led to the downside. After earnings, GM rose 4.4%. And in other news, Peloton plunged 16% after it recalled its treadmill products and will stop selling them in the U.S., and Pfizer and Moderna are sinking right now. On news, the U.S. supports a waiver of vaccine patents protections at the WTO. Wrapping things up, Allstate, Cisco, Etsy, and Uber all report after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
And we thank you very much. And to hear live breaking news over your Bloomberg, type Squawk, S-Q-U-A-W-K, S-Q-U-A-W-K on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. So among our most read stories on the Bloomberg, it's about Bill and Melinda Gates and the division, Tim, of their $145 billion fortune. There's a lot of moving parts to this.
There are. Sophie Alexander is a reporter at Bloomberg News, and she joins us on the phone from New York City. So, Sophie, what are the indications thus far about how the Bill and Melinda Gates Foundation will run after Bill and Melinda Gates are no longer married?
What they're saying right now is that Bill and Melinda are going to stay in their roles, nothing is going to change, and they're going to continue to run the organization together. Now, the Gates Foundation is unique in a couple of ways. First of all, it's the biggest organization of its kind in the world. It's got a $50 billion endowment, and there are only 3 people on the board of trustees of the organization, which is not normal for a foundation of that size. Just Bill, Melinda, and then their good friend Warren Buffett.
Yeah, I feel like going through your story, it was just one big number after one big number. I mean, it's the foundation, it's the philanthropy. There are investments, right, by Bill Gates. We know he makes investments in startup companies. We know he's been very active when it comes to climate change. You know, that could potentially be impacted.
That's right. Yeah, the fortune is made up of a bunch of moving parts. So it's, natural to try to compare this to the Mackenzie Scott and Jeff Bezos split a couple of years ago. It's another tech billionaire couple in Washington, but the Amazon fortune made up most of the Bezos couple's fortune. So that was a pretty simple split. Mackenzie ended up with a quarter, and Jeff ended up with 3/4. But in the Gates fortune, there's a lot more going on. They have not only their investments, their stake in Microsoft, but there is a hodgepodge of other companies that they have, a couple dozen of them.
Yeah, you note in your piece, Sophie, that you wrote with our colleague Ben Steverman, that Cascade Investments transferred securities worth more than $1.8 billion to Melinda Gates. That's according to regulatory filings on May 3rd. Do we expect more there?
Yeah, so we are watching out for more alerts of this kind. So far, what we've seen is a Cascade transferring some of its shares in public companies from Bill's name to Melinda's name. And that's, so far about $1.8 billion worth of shares, mostly in Canadian National Railway. But there are a lot of other companies that they have stakes in. And so we could see more of this in the coming days, weeks, and months. This process could take a while.
Right. That alone has excess of $50 billion as well, right? And there's stakes in Deere and Company, Republic Services, Ecolab. I mean, right? It's the $50 billion is a lot spread around a lot of different places. It's interesting too. What's the law in the state of Washington when it comes to marital assets?
Sure. So Washington is a community property state, which means that anything acquired during the marriage is equally both Bill's and Melinda's. It's a 50-50 split in the eyes of the court. Now, that doesn't necessarily mean that we're going to see Melinda and Bill get 50-50, as we saw with Jeff and Mackenzie. She ended up with 25% of the Amazon stake, and Jeff ended up with 75. It's just what the court sees as just and fair.
So I know we're kind of going from foundation to personal holdings, but the fact is these are really tied together. After all, it's called the Bill and Melinda Gates Foundation. One of the parts of the story that you bring up in this piece, Sophie, is the idea of potentially splitting into two foundations. What do experts say about doing that, and how it could actually make it easier or harder to run things moving forward?
Sure. So that's something we've been told is not unusual for wealthy couples to do once they split up. But the Gates Foundation is sort of, something of its own because it is such a big institution in the world of philanthropy. So splitting that up would be a pretty big deal. It's unclear whether they would ever consider doing that. So far, the word is that that's not what they're going to do, so we can operate under the assumption that they won't end up doing that. However, things might be affected in terms of who is involved more in the future, and maybe they'll focus more on their individual philanthropy instead of being more engaged with the foundation.
So, Sophie, as you said, you guys are looking for regulatory filings, to get an idea of kind of where the money goes and how it gets split up. But I mean, ultimately, in terms of your reporting, I think I read it in this story and possibly elsewhere. I mean, safe to assume that they've figured this out before they made the announcement. There's got to be like the paperwork in place, I'm guessing.
Oh, yeah, for sure. I mean, the fact that they already had some of these transfers go on Monday, the same day that they announced they were splitting, is a sign that they've already figured out much of this.
Yeah.
And divorce lawyers we talked to said the same.
They're also among the largest landowners in America. I had no idea.
Yeah,
I mean, they've got a huge home.
66,000 square foot home? I didn't know that till reading this.
That I knew.
That's just one home.
Right.
Yeah.
And, well, it's supposed to be, I think, a very cool high-tech home,
I'm
or at
sure.
least it used to be. But
runs on Windows, maybe. I don't know.
Exactly. Great stuff, putting numbers to this story as well. And we know it's a personal story. We do wish Bill and Melinda and their family well. Sophie Alexander, thank you so much. Reporter at Bloomberg News on the phone from New York City, $145 billion.
That is a lot of money. I would also wonder how long it's going to take.
I think the paperwork's done.
Remember, the Bezos one didn't take as long as people thought it would.
I'm thinking the paperwork was done a long time ago. Just guessing.
I wouldn't be surprised.
All right, stick around, folks. Chart of the day with the one and only Dave Wilson coming your way right here on Bloomberg Business Week. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So we've got about 29 minutes left in today's trading session. Coming up, though,
it is the chart of the day and the song of the day.
Yes, indeed. Looking forward to something. I need a little bit of music to kind of get me up and going. Maybe dancing around the studio or something.
Well, hopefully it's one of those songs.
Yeah. For those of you on
Careful
YouTube, there will be
for.
no dancing. All right, let's get back to the markets and a check on that trading day. Hey, Charlie Bell.
Well, hello there. Mood on Wall Street right now. The musical mood is late day fade. We've got the Dow holding on to gains. The S&P barely did go negative just a couple of minutes ago. Right now up by about a point. NASDAQ firmly in the red, down 58 points now, drop of 0.4%. NASDAQ 100 index slumping by 0.3%. Stocks paired gains on news that the United States will support a proposal to waive intellectual property protections for COVID-19 shots. That has sent vaccine makers down. Among some of the names that we follow, Pfizer down now by 0.3%. Its German partner, BioNTech, the ADR is down 0.7%. ADRs of AstraZeneca higher by 1%. Hard hit Moderna tumbling now by 5.1%. Johnson & Johnson shares there down by 0.3%. S&P up 2 points, little changed, up 0.1%. Again, late day fade there. We've got the Dow up 99, up by 0.3. NASDAQ down 0.4. 10-year yield 1.57%. Gold up $6 the ounce, higher by 0.4%. West Texas Intermediate crude down 0.7%, 65.21 a barrel. Canada has become the first nation to clear the Pfizer-BioNTech coronavirus vaccine for adolescents. White House Chief Medical Advisor Anthony Fauci says the U.S. is expected to take similar action, quote, within several days. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health, and she sees vaccinations as a powerful incentive for life getting back to normal.
As more and more people get vaccinated, seeing friends and loved ones who get vaccine and who are safe and who are still healthy and who have been protected from coronavirus is huge. And the impact of that can't be underestimated.
Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Again, repeating, vaccine stocks for the most part lower. Pfizer down 0.5%. German partner BioNTech, the ADRs down 0.4. ADRs of AstraZeneca up 1%. Moderna tumbling 5.7%. Johnson & Johnson down 0.4. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. This is Bloomberg.
We said all there is to say. Baby, break down. Go ahead, give it to me. Break down, honey, take me through the night. Break down.
I miss this guy. Tom Petty. Tom Petty. Right?
Right.
Good job.
Thank you.
I couldn't think of
I really like Tom. One of my earliest memories of music, Full Moon Fever. I think early 1990s. My dad had the album. I'm a big Tom Petty fan. Saw him live a few years ago.
Yeah.
Well, at this point, it was more than a decade ago.
Wow.
That one hit hard.
Hard to believe
for
he's
me.
gone. Yeah.
That one hit really hard.
Yeah, and of course, Full Moon Fever was a Tom Petty solo album as opposed to the many albums he did with the Heartbreakers.
And the Traveling Wilburys.
Oh, yes,
I'm a
of
big
course.
Traveling Wilburys fan.
That was like
another
an incredible band.
Talk about a super group.
Yeah, exactly.
And while we're at it, let's not forget Mudcrutch was actually a band he had before the Heartbreakers, then got back together and made a couple of albums with them.
Mudcrutch. What a great name for a band.
Yeah, absolutely.
All right, good stuff. Hey, so breakdown. Talk to us about this. You're looking at U.S. Canadian software stocks.
That's right. They've been going through a relative breakdown. That's not me saying that. That's Jonathan Krinsky, who's the chief market technician at Baycrest Partners. Now, his latest research out yesterday really focused on the semiconductor stocks. And, you know, we've talked about those a bit and how in the past few weeks they've shown a bit of weakness, especially as quarterly results have come out. But this particular chart focuses on, shall we say, a more obscure market index, but one that has an ETF tied into it. The ticker on that ETF is IGV. It tracks something called the S&P North American Expanded Technology Software Index. I know, a lot of words, but what we're talking about, companies on either side of the U.S.-Canada border that focus on system, applications, and home entertainment software. That's what this index is all about. And, as the chart shows, in December, the ratio between this indicator and the S&P 500 peaked at a record, and then it started pulling back. As of yesterday, the ratio was down 16% from its high and got to its lowest level in a year. So what we're seeing are software stocks, as the headline of the chart says, going soft. And if you haven't seen this particular chart yet, folks, send me an email. I'll get it to you along with the explanation that goes with it and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
This is kind of an interesting correlation or relationship.
Yeah, that's what I thought,
right?
Which is why it's today's chart. Absolutely.
Okay. So what's coming up in your stock of the day?
Oh, goodness, the stock of the day. Well, I'll tell you what, in this case...
You don't want to do it, Dave. Listen, we're just trying to,
No, I'll tell you, it's a company called Caesarstone. They do quartz countertops.
Yeah, totally.
Absolutely. And totally,
everybody reads Zillow these days nonstop. So, and like looking at Street Easy. So it's like
well,
every
there
ad.
You go.
Well, quartz is the new thing. Like nobody wants granite anymore.
Yeah.
It's like, yeah.
Yeah, and they're right in the middle of that. They're benefiting from it. Their first quarter results were well received, and the shares, well, they've just taken off in today's trading.
What's the ticker?
The ticker is, I believe, CSTE for Caesarstone.
That's a really interesting one.
Okay.
I wonder about supply chain issues there, too. They're having that.
Up 27% this year.
Wow.
And most of it's today.
Most of it's today.
Yeah.
Yeah. Listen, I know we've talked about this. I've got a couple brothers who are contractors, and just material, anything to do with housing is just off the charts right now.
Yeah, and absolutely, and Caesarstone certainly fits that bill. And, like you say, we had a shift away from the granite countertops of old to quartz, and they've been, a beneficiary of that change in demand.
Hey, Dave, favorite Tom Petty album?
It's hard to pick. I'm kind of partial to the early releases, I suppose, but, it's hard to go wrong with any of his.
I really liked Wildflowers, too. That was another one that I liked.
Yeah,
Tom Petty's one of my favorites. I want to remind everyone, look for Dave's Stock of the Day. It's just after 4:15 p.m. Wall Street time. It's on Facebook, it's on LinkedIn, and, of course, it's on Twitter. You can follow Dave at The One Dave.
Dave, you more of a bluestone or granite kind of guy?
I just like something solid. That when I put my knife down to cut, that isn't going to break apart or whatever.
I feel you.
Or I don't have to seal it in 2 years. It's like, please.
I want something that crayon and marker is clean. It's cleanable. That's what I need.
I think that's what right?
Yeah. Oh yeah.
Quartz.
It's great.
Quartz is
it's
like
great.
you can't kill it. Dave Wilson, thanks again. Be sure to check out his stock of the day coming your way at 4:15 p.m. As Tim mentioned, Facebook, LinkedIn, and on Twitter at The One Dave.
Well, let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. President Biden says the Republican Party appears to be struggling for its identity.
They're in the midst of a significant sort of mini revolution going on in the Republican Party. I've been a Democrat for a long time. We've gone through periods where we've had internal fights and disagreements. I don't ever remember any like this.
He's referencing an effort by the number 2 Republican in the House to replace the number 3. A spokeswoman for GOP whip Steve Scalise says the congressman is backing New York's Elise Stefanik to replace Liz Cheney as chair of the House Republican Conference. Bloomberg Government's Emily Wilkins says it stems from disagreements over former President Trump.
Cheney was one of 10 Republicans in the House to vote to support the impeachment of Trump. And you saw a lot of members be upset about that.
Wilkins reports Cheney has continued to criticize the former president for claiming the election was stolen. Punchbowl News reports that House Republican leader Kevin McCarthy is working behind the scenes to boost Stefanik by reaching out to other potential candidates for that leadership role. Well, the U.S. will support a proposal to waive intellectual property protections for COVID-19 vaccines. That's the word from the U.S. Trade Representative Catherine Tai. So the U.S. will join an effort to increase global supply and access to the life-saving shots as the gap between rich and poor nations widens. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons. This is Bloomberg.
All right, everybody, New Jersey seems to be open for the summer. And New Jersey Governor Phil Murphy predicting a, quote, big summer for tourism at the Atlantic coast, but a slow recovery for the state's mass transit system. I'm already going to be down there with family for a week.
You are?
Yeah, down the Jersey Shore.
I hope it's on the calendar.
It's on the calendar.
I'll be flying solo.
You will be.
You know, it's funny you say that because I had a conversation with my cousin over the weekend. I got to see him and his new baby and his wife for the first time in 14 months. I got to meet the new baby. Wow. And they were saying, hey, we want to go to the beach this summer. We don't want to get on a flight. And we said, hey, go to New Jersey, do a week on the beach there, go to Delaware. These are all within driving distance. Yep. And I think we're going to see that with, look, people feel differently about how they want to travel places right now. But I think there's a different part of the equation when there's an unvaccinated newborn or when there's an unvaccinated 3-year-old, right? Who won't necessarily do a great job of wearing a mask on a plane.
Right, exactly. Listen, we saw it last year play out, whether it was out in the Hamptons or certainly up and down the New Jersey coast, the Connecticut coast, the Rhode Island coast. It was packed because people were booking up beach houses because they couldn't fly anywhere. And so this is what we're hearing from Governor Murphy. He says he did talk, though, about New Jersey Transit. You and I talked about it. I have yet to get on mass transportation. Not quite there yet, getting there, even though I'm vaccinated. But he said a slow recovery for New Jersey Transit, where rail ridership remains about 20 to 25% of pre-COVID levels. Some of that has to do, though, I think, with schools reopening for parents.
I think so, too. And, I communicated with a colleague of ours here today.
You talked with him?
His email.
Okay.
Email. I emailed with him. Who says communicated with? I emailed with a colleague who I still haven't actually gotten to meet in person, like an old friend who I work with here.
Yeah.
And he sits upstairs and he lives in New Jersey, and I say, hey, are you going to be coming in anytime soon? It'd be awesome to see you. I haven't seen you in so long. He's like, part of it was, making sure everybody's vaccinated, everyone's safe. But the other part is braving New Jersey Transit and getting into the city, because even before the pandemic, it was facing serious issues.
Exactly. I mean, I don't understand it because a lot of people use it, so there's a lot of money going into it, but it's really a system that we know, any of us who've taken it, is really, there's a lot of problems to it. It's really just being maxed big time. All right, you're listening to Bloomberg Radio.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I'm Charlie Pellet. President Biden says he is open to compromise to reduce his proposed hike in the corporate tax rate as he seeks to fund his sweeping infrastructure and jobs proposal. And Fed Vice Chair Richard Clarida says the U.S. economy still has, quote, a long way to go before repairing the harm of the COVID-19 pandemic, and it's premature to discuss scaling back central bank asset purchases. His comment came in an interview with CNBC. We've got tech shares leading losses. 12 minutes to go ahead of the closing bell. Vaccine makers retreating on news that the U.S. will support a proposal to waive intellectual property protections for COVID-19 shots. S&P 500 index up by 6, has been fluctuating between gains and losses. Did dip into the minus zone just a couple of minutes ago, up now by 7, a gain of 0.2%. The Dow up 130, up 0.4%. NASDAQ negative, now down 33, drop there of 0.3%. 10-year yield 1.58%. Gold up $6.50 the ounce to $17.85, up 0.4. West Texas Intermediate crude down 0.6%, $65.30 a barrel. After the bell, lots of earnings, including Fox Corp, Zynga, the game maker, Allstate, and Etsy. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Just about 9.5 minutes left in today's trading session. Let's get to it with Michael Sheldon, Executive Director and Chief Investment Officer at Hightower RDM Financial Group, based in Westport, Connecticut. And that's where he joins us once again. Michael, good to have you back with us. How's it going?
Thank you very much.
Yeah, how's it going?
Thanks very much.
So talk to us a little bit about, because it's been an interesting 2 days. Yesterday, we saw pressure on the tech community, and I think once again, everybody's like, oh my gosh, what's happening with technology stocks? And then today, seems like everything is fine. So if you slept through yesterday, you would have never even known the problems that everybody was talking about yesterday. How do you see kind of what is truly guiding the trades? Is it earnings? Is it economic data? Is it inflation concerns? Is it the economic recovery? How do you see it?
Well, I think what's right. I think the important thing is that we're in the early stages of a new economic expansion that started after the downturn in early 2020. And the markets have certainly staged a fairly strong advance over the past year or so, and that's certainly clear. There certainly may be some sectors or companies that are a little bit ahead of themselves. But I think if you look at some of the economic data, if you look at things like retail sales, jobless claims are finally starting to improve, some of the housing data, the ISM indices, you can see they all point to a surge in economic activity. I looked at today, for example, the Atlanta Fed forecast what GDP will be each quarter, and their early read for second quarter GDP is a whopping 13.6%. So I think we all sort of knew that GDP was going to really jump after last seeing some of the recent data, but that's certainly an eye-popping number.
Right, but it also dropped off a cliff, in the shutdown. So I always think we have to be smart in terms of the perspective here, no?
Yeah, no, that's important. So, I was looking at some of the GDP data, and the question is, we all know that we're going to see a pretty strong surge in economic activity this summer and probably into the fall. The one thing we were looking at when GDP came out last quarter, just a couple of weeks ago, I think it was 6.4% for the first quarter. One of the things that we always look at is inventory levels. And the thing that caught our eye is inventories were actually drawn down. So inventories decreased by 2.6%. And what that means, or the way to interpret that, is the economy is expanding, but inventories were drawn down. So that basically leads us to think that there's sort of a growing pent-up demand. Manufacturers are going to have to continue to increase production in order to meet demand, and that should keep the economy humming. That, along with the fact that consumer savings rates are over 20% right now, and you see many states starting to open up. So we have a significant amount of strong growth over the next few quarters, but then from there, the crystal ball gets a little cloudy.
Michael McKee mentioned that about the inventory rates being inventory levels being drawn down, and then that means that you're going to have to see people hire and ramp up activity.
And Michael, it's not just you. I think that a lot of CFOs right now are thinking that crystal ball is a little foggy. We do see companies in the midst of earnings season not necessarily giving guidance, much to the disdain of investors, because they don't know exactly what is going to happen. When we think about 2021 and when you think about this recovery and this growth in GDP, to what extent is the recovery priced into U.S. equities right now, and where are the opportunities? Because there has been sort of a shrug, collective shrug, with some pretty good earnings numbers.
Right, you're absolutely right. Unfortunately, we're not allowed to mention individual stocks, but you know which these companies are. So I was looking at some of the large cap technology stocks, and the leaders, the top 4 names, for example, produced some very strong growth of 45% in year-over-year sales last quarter, which are some pretty strong numbers. And we have a certain amount of growth in technology in our portfolios because we think you want to have that in order to meet your long-term investment goals, since we're investment advisors. But I think even though a lot of these technology companies had very strong results, they were kind of met with a little bit of a shrug from the markets. And I think what you're seeing is investors are sort of rotating into some of the areas of the market that haven't really participated over the last several years. One of the differences in this market versus the last several years, it's not just technology this year. There are other parts of the market participating. So, for example, we're not giving up on technology, but we also have some exposure in healthcare, for example, which is a growth at a reasonable price, and industrials as well. You want to be a little more diversified this year as opposed to the past several years, I think.
Well, and you kind of can be, right, in an economic recovery.
That's correct. There are more areas where you're seeing a rebound in sales and profits over the past, compared with the past several years. And the other thing I would just point out is one of the differences we see in this environment also is, unlike the past several years where you really wanted to be massively overweight the U.S. versus foreign markets, we think this is ultimately going to turn into a global recovery. So if you've been missing out on foreign, that's sort of not a bad thing, but you may want to take a look at your foreign exposure and maybe start to think about adding to that a little bit.
Hey, what did you think of everything that happened yesterday with Janet Yellen? She later clarified that she wasn't forecasting interest rate rises, but it seemed to send some sort of message to the markets, to the equity markets.
Yeah, I mean, that was certainly, on the surface, that certainly looked like a misstep. Interest rate policy, and she should know better than everyone else since she used to lead the Fed.
Right.
I wonder, I was kind of joking around. I was kind of joking around yesterday, Michael. I was saying to Carol in the studio, do you think she has FOMO? Like, she's kind of like really misses being part of the Fed.
As soon as I saw that headline, I think it was late morning, I really thought the markets were going to sell off in the afternoon. But when you think about it, almost nothing is by chance. And so that was probably a trial balloon, just to sort of, the Fed and the Treasury are working together. The Fed has been pumping out $120 or $140 billion in debt, and the Treasury's been buying some of that. So the two are working together closely. But I think the interpretation is that was probably maybe an early trial balloon, even though we're not likely to see any change in Fed policy anytime soon.
Not quite a temper or taper tantrum, but nonetheless, that's interesting, and that's an interesting take on it. Where don't you want to be in this market environment right now, Michael?
Well, keep in mind the economy is still expanding. One stat I was just looking at is earnings per share growth. At the beginning of this quarter, they were forecasting about 24% growth. And now, with about more than 2/3 of companies having reported, earnings estimates for the first quarter are up at 46%. So you're going to continue to see probably better than expected growth and better than expected economic data for a while. And in that environment, you probably want to underweight some of the more defensive parts of the market, like utilities and consumer staples. Those are the areas you want to favor more once the economy hits its peak and then starts to gradually slow down, which is somewhere down the road.
Yeah, which is what the market's doing today. You're seeing some of those interest rate sensitive, those are some of your drags on the market today. Real estate, utilities, they're down, consumer discretionary as well. It's very interesting. Your focal point right now at this point, is it just the jobs report come Friday?
Yeah, I think Friday's jobs report is certainly important. We're going to get a big number. The question is, does it live up to expectations? We could get a pullback or a correction, I think, at any time, but I think the direction of the economy is towards stronger growth, and we're still constructive looking ahead, although there may be some bumps in the road as we look ahead.
Friday, Jobs Day. How are you reading into it, very briefly? Just about thinking about, like, what happens if you miss it.
I think you want to look at a few things. Well, if we miss the number, even if it comes in around 800,000, 900,000, I think you want to look at the
Which is
number of.
crazy to say that's a miss, but the context.
You're absolutely right. It could be we could be in a period of time looking ahead where earnings and economic growth is very strong, but maybe it meets expectations or misses expectations just a little bit, and that'll be interesting to see what the market's reaction to that is. But I think we do have some. I think we will have some continued strong economic growth probably for several months ahead.
Got it. Michael Sheldon over at Hightower RDM Financial. Thank you so much. Coming up next, we're going to be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube, counting you down to today's close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away here from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. Our global simulcast team, Carol Masser and Tim Stenovic, joining us right now, bringing together our Bloomberg television, radio, and YouTube audiences. Carol, it's been quite a day here in the markets. We had a modest rally here earlier in the day, but that quickly faded here as we got towards the close.
Yeah, absolutely. And I think, we're in this early stages of an economic recovery, and some days investors focus on that and see more momentum going forward. And certainly earnings provide some support for that, Tim.
Yeah, that's right, Carol. It really does seem like Dave Wilson, our stocks editor, summed it up on our show earlier in the day, saying that this day was really driven by earnings. And there were, of course, some big single-story stock moves and stories that really moved company stocks like Uber, Lyft, and the vaccine makers, and, of course, Peloton as well. But that really seems to be the theme today, Taylor.
It does. It's risk on, at least when you're taking a look at some of the fundamentals as we await the reopening trades of Uber, Caroline, after getting Lyft yesterday. Etsy, of course, and PayPal, if you want to get a little bit of a risk-on tone. It catches my eye. Ethereum and Bitcoin, those are, well, the gainers today, Caroline.
Interesting, of course, we had Gary Gensler, talking about the evidence he's giving to the House in terms of, looking at regulatory change for some of those, online investing areas. Is it gamification? That's certainly something that we still look at in the market. But for me, Romaine, too, the story was one of questioning inflation, questioning this ISM, services data that just showed the supply chokeholds that we're seeing.
Yeah, absolutely. And I think this really puts a lot more attention on the economic data, on those economic reads. Obviously, the jobs report is going to be big on Friday, but more importantly, some of that data going forward about how those supply chains shake out. Here's where we stand right now here as we get the closing bell here in New York. The S&P 500, it actually opened significantly lower here on the day, I should point out, and then it actually rose, and now it looks like it's going to end the day pretty much here flat on the day. The S&P, the NASDAQ composite opened higher. It was up about 0.7%, going to end the day down about 0.3%. The Dow Jones Industrial Average right now up 97 points, up 0.3%, we'll call it here. The Russell 2000 also down here on the day, 0.3%.
I think when you look at the markets, generally speaking, it is just kind of this back and forth between, are we concerned about inflation? Are we looking at the growth that's to come? Most market watchers, you say, listen, we're in good shape, certainly for the second quarter. Just look with the Atlanta Fed. Early read up 13.6% for that second quarter. At the same time, there are fears about that lack of transparency and longer-term outlook, Taylor.
And it's so interesting that we continue to talk about that inflationary debate because, frankly, if you're thinking that the S&P 500 is a real asset and stands the time of inflation, it is classic risk on. It's energy, materials, banks, right? Financials, those are pretty much all in the lead, up anywhere from 1% to 3% as the top sectors for our radio listeners. And I just bring you back down to the bottom. It's real estate and utilities. Those are the bond proxies, which, Carol, it's interesting, those would not actually maybe be the real estate play. So you're seeing a little bit of an interesting sector, at least here, as you continue to see those sectors off about 1.7%.
All right, folks, we do have some earnings crossing the Bloomberg terminal and booking holding. Let's go through the numbers. First quarter revenue, it is a little bit light, 1.1 billion versus an estimate of 1.16 billion. Booking first quarter adjusted EBITDA loss of 195 million. That too is greater than what the street was looking for. Caroline, they were looking for a loss of about 161.3. They play into the travel sector. We know this. They did say first quarter improving trends continuing into the month of April, but we're going to want to know more about visibility for this company.
Big news, of course, on the vaccine front was that the U.S. is supporting a waiver of the vaccine patents. That was impacting Moderna, but what's also going to impact Moderna after hours is that the fact that its booster shot bolsters antibodies against COVID variants. This is so important as we see COVID sweeping with mutations across India, some of the emerging markets, of course, mutations that affected the UK in particular. They announced the mid-stage booster trial data in a news release and the positive initial booster data that we're getting out of that, Taylor.
Yeah, we get some other earnings, of course, here within the horse race. We'll talk about Fox a little bit, as we've been knowing. A third quarter revenue coming in at $3.22 billion, a slight improvement of the 3.1, Romaine, that we were been estimating. Third quarter adjusted earnings per share as well, an improvement 88 cents versus 58 cents. So continuing to see perhaps maybe better than expected results, Romaine.
Yeah, better than expected results. Of course, we're still waiting on a lot of the other big names here, primarily Uber. Want to keep an eye on that, as well as PayPal, Tapestry, of course, also crossing here. When we look at the earnings season, though, and what's sort of been happening here, Carol, you have to kind of really not only talk about what the companies have reported with regards to the top and bottom line numbers, but really about the forecast that they've been giving about the sustainability of this. A lot of people are looking at the back half of this year, Carol, and they're saying the comparisons are just going to get tougher, and some of these companies just don't seem to be showing the momentum to actually meet some of those targets.
Spot on, Romaine, because we were just talking with Michael Sheldon over at RDM Financial Group, and this is exactly what he said. You know, we have visibility for the second quarter. We know what's going to happen. We know there's a lot of stimulus that's coming into it. But, you know, what happens after that and what happens as we get into the next year? And that's certainly the concern going forward. Let's do a quick check on some of the gainers in today's session. You know, Under Armour, big gainer in the S&P 500, up about, you can see 7% here in today's trade. That company up the most in 12 weeks after an EPS beat. Volume was pretty heavy. Another earnings story, Caesars rallying after the CEO predicts a post-pandemic casino boom, and you can see that stock up almost 8% in today's session. Then I wish I was Jessica Alba on so many different levels. I'm just going to put it out there. This stock, an IPO today, and take a look. That stock finishing up about 43%.
Are you a big Jessica Alba fan?
I just want her, and I want her millions because she's worth a lot right now.
Sure. Okay.
I don't mind looking like her. Number 4 gainer, I think it was a top name in the NASDAQ 100, T-Mobile, and you can see that.
Why hasn't Goop and Gwyneth Paltrow? They haven't gone public? I mean, if Honest can come to market.
Wouldn't you stay private if you could?
I guess.
In this environment, everybody seems to be going public. Let's look at some of the decliners that stocks that moved lower on the day today. Peloton, the big story playing out, of course, the recall of the Tread and Tread Plus Peloton shares cratering today as a result of that. Down more than 45% this year, guys. Remember, it was a pandemic play, but this year is not going well for the company. Lyft and Uber also lower today. This one is all about labor. Remember, the Biden administration canceled today this Trump-era rule that would have made it easier for businesses to consider workers as independent contractors. We have an interesting Bloomberg intelligence report that says in the near term, this could be headwinds for the company, but in the long term, it could prevent competitors from coming in there. But as a result, Uber and Lyft sliding today. And lumber liquidators lower today. The company reported first quarter comp sales growth that missed average analyst estimates. Carolyn.
Let us get some more earnings for us, because Uber coming out with its numbers right here, right now. And we are announcing the results for the fiscal first quarter 2021. And they are seeing their bookings climb 24% on strong growth in delivery. Also, they say first quarter revenue, $2.9 billion is where we stand overall. So this is a company that is continuing to see perhaps like a slight miss on its revenue ex UK accrual of $3.5 billion, but they did see a first quarter loss of $108 million, including $281 stock-based compensation expense, they say. The first quarter loss per share, 6 cents. The estimate was for a loss per share of 60 cents, so doing better than expected on that particular front. And really, mobility, 6.8 billion in terms of growth, but delivery, food remain. That is where the strong set is, $12.5 billion in terms of its numbers.
Yeah, and of course, a lot of people sort of laughed and said they shouldn't have sort of moved deeper into that food delivery business, but that's really been the ballast here during the pandemic here. It'll be interesting to see how this becomes a huge component of its business going forward. You're talking about a company that still ended the quarter now with close to $6 billion in cash. So this is a relatively healthy company here. We're going to dive a little bit deeper into their earnings, because we do know that there are still concerns here about those regulatory issues, also concerns here about what they got to pay to get a lot of those drivers back once, of course, all the riders come back into the market here. I should point out, we also have Etsy earnings crossing the wire, which I think we should mention here. That's coming in at a huge beat. EPS coming in on the first quarter, I should say, at $1. The street was looking for 10 cents.
Interesting. Yeah, and I don't want to make us all confused by going back to Uber, Romaine, but just getting some quotes, digging through the press release here, talking about really improving, Tim, that EBITDA performance, which we heard from Lyft yesterday, reiterating that guidance at third quarter 2021. They will be adjusted EBITDA positive. So Uber is saying that they are having an improving EBITDA performance as well, but really seeing some of the UK business dragging down their earnings per share. They had a $600 million expense that weighed on revenue, really added to its loss, given, of course, the rulings about the gig economy.
Look, that decision really speaks volumes about the challenges that Uber faces in different countries around the world, even different states. We saw it play out in the labor battle in California, which ultimately these gig economy companies prevailed. But it does show the challenges that they are up against, given that they have risen so high, and there have been so many questions about the way that they classify and treat workers here in the United States. Gross bookings climbing 24% for Uber, beating analyst estimates of $18.1 billion. Caroline Delivery, again, the darling for the company.
It's interesting, though, that we had a guest on a little bit earlier, Ali Mograhabi of Morningstar, saying actually maybe UK law is where, to a certain extent, Uber and Lyft want it to go. John Zimmer of Lyft previously saying, look, this news out of the administration that they're going to be changing the way, they're not going to be following Trump's ruling on the gig economy. It was expected. We knew they would change their mindset, but really it's the state and local legislators that really have the ultimate decision here, Carol.
But it's real money. We're talking about $600 million in expenses because of the changes in the UK and how they're reclassifying their workers. And listen, the gig economy, it's a big one. It's a lot of those new economy companies remain. And so we have to see if this is going to be a bigger cost going forward.
Yeah, and we're going to dive a little bit deeper into that a little bit later on this show. We're going to have Arun Sundararajan, of course, of NYU, who's been all over the gig economy. He always provides some good insights, and he's actually had a pretty level-headed perspective on Uber, Lyft, and how all of these companies really sort of transition to kind of the next stage of this evolution of, I guess, what you call the gig economy.
Hey, guys, I want to end with something that Michael Sheldon talked a little bit about when he joined us on radio, Executive Director and Chief Investment Officer at Hightower RDM Financial Group. He said the crystal ball for him for 2021 looks a little foggy toward the end of the year. Etsy, I should say, it's looking foggy for them, too. The company's saying it's not issuing guidance for full year 2021. We've seen a lot of companies do that, much to the chagrin of investors.
Yeah, the tech, though, sector, we're going to talk about, too, with Scott Galloway. I think we're all going to be all in on it because that is certainly, it feels like the future, and we want to know where it's all going. All right, that's going to do it for our cross-platform coverage on Bloomberg Radio, Bloomberg TV, and on YouTube. Join us again tomorrow. We'll be back at the same time, same place.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Quick Take. You're all right, sorry, switching my IFBs here. Bloomberg Business Week, of course, Carol Masser along with Tim Stenovic, and we're going to talk a little bit more about tech. We're going to have Scott Galloway in just a moment. In the meantime, let's get back to World and National News and Nancy Lyons. Hey, Nance.
Hey, Carol. President Biden says the nation's restaurants need a boost following the pandemic. He's launching a new $28.6 billion restaurant revitalization fund created by the pandemic spending bill.
Its grant applications began on Monday, the president said. 186,000 have come in.
For nearly 1 in 3 Americans, it's hard to believe, but for 1 in 3 Americans, a restaurant provided their first job. There are families of all races, all ethnic backgrounds, all nationalities in this country who have built their American dream around a family-owned restaurant.
The president said he'll meet with Republicans next week in his quest for compromise, adding in answer to a question that their party seems to be in the midst of a mini revolution, trying to figure out who they are and what they stand for. In Washington, Irv Chapman, Bloomberg Radio.
The head of Facebook's independent oversight board is defending the panel's decision upholding former President Trump's suspension on Facebook, at least for the time being. His account was suspended 4 years ago for inciting violence that led to the Capitol riot. Thomas Hughes says the social media giant has a right to act if a user's words pose a risk.
Where political leaders or influential users pose harm in that speech, where there is the risk of incitement of violence or discrimination or lawless action, Facebook has to act.
Global news 24 hours a day on air and on Bloomberg Quick Take.
All right, Nance, thank you so much. You're listening to Bloomberg Business Week. Carol Masser along with Tim Stenovic in our Interactive Brokers studio. Big story. And we talked about it a little bit in terms of the impact on Uber earnings and a reclassification of workers specifically over in the UK. But today we heard the Biden administration canceling a signature Trump-era rule that would have eased businesses' ability to legally consider workers as independent contractors. We're talking about the gig economy. It's a rollback that the U.S. Labor Department said was necessary to broadly extend wage protections, while cracking down on employer abuses.
As a result of this Bloomberg exclusive, Bloomberg's Ben Penn breaking the news on this, Uber and Lyft shares moved lower, and it makes sense. We just saw with Uber earnings, the company had to pay a significant amount of money in the UK, where there was a similar reclassification of
$600 million.
That is a lot of money.
Yeah.
That is a ton of money. This is the business model for the companies.
Well, think about the overhead expenses. I think of, a spreadsheet. I think about, the financial spreadsheet there. And when you start adding in costs, if you make them regular workers, whether it's healthcare, whether it's all the kind of benefits that go along with it, how does that change the dynamics of sometimes a financial modeling that is tricky to begin with?
Well, look, it means that it's going to cost more to get from one place to another, because at the end of the day, those costs will be passed on to the consumer. And in a sense, I think it kind of all makes sense, because there has to be an ecosystem. And we'll talk with Scott Galloway about this too, I think, because there has to be an ecosystem that works for all the different stakeholders involved.
And why
it needs to work for employees too.
Absolutely. One of my favorite things is getting into an Uber or Lyft and talking to them about the dynamics and the math. And I've talked to drivers who were drivers really early on.
It was good times then.
They made so much money, and it's not the case. So how do we look at these jobs? What are they supposed to be? Are they supposed to be jobs that can support a family? I don't know.
I don't know the answer to that either, but in the UK they do know the answer, and it ends up costing Uber a lot more money. It gives a good preview for what could happen in other parts of the world, and for Lyft, other parts of the country.
Yeah, just a reminder that maybe the regulatory changes, maybe there could be more coming. We'll certainly keep an eye on it right here on Bloomberg.
facts, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Earnings fast and furious after ours. MetLife's first quarter adjusted EPS, $2.20. Estimates there, $1.51. That crossing right now. PayPal's first quarter adjusted EPS did beat estimates. Uber reported a 24% increase in gross bookings in the first quarter, driven by continued growth in the delivery business. Uber shares trading lower now, down by about 0.4% after ours. Moderna's COVID-19 booster shots gave positive results against immune system evading strains that have emerged in South Africa and Brazil, according to early results from a mid-stage trial. Now, after ours, Moderna shares, they are trading lower, down now by about 5.5%. Tech-led losses in stocks today, almost wiping out in advance. It was driven by optimism over solid earnings and economic data. S&P up 3 points, a gain of about 0.1%. The Dow up 97, up by 0.3%. Nasdaq down 51, a drop of 0.4%. 10-year yield 1.56%. Gold up $8 the ounce at $17.87, up 0.5. And West Texas Intermediate crude, lower little change, down 41 cents a barrel, 65.28 for West Texas Intermediate crude. That is a drop of about 0.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Masser, Tim Stenovic on this Wednesday in our Interactive Brokers studio. So engaging with customers, it became crucial during the pandemic and shutdown. Companies had to quickly figure out how to do it when the norm no longer worked. We knew that, Tim. LivePerson is the company that knows all about it. Reported earnings after the close yesterday. Stock rallied as first quarter results beat expectations. The company raising its full year revenue. So great to have back with us Rob LoCascio.
He's founder and CEO of LivePerson, joining us on the phone from Fairfield, Connecticut. Rob, what worked so well for the most recent quarter and the outlook of the year? Why are things going so well?
There's just so much demand for AI and conversational AI and bots and messaging.
Right.
Consumers, we want to do things differently, and so we had Dunkin' Donuts now is using it for their consumers to sign up for their loyalty programs, and we got a big jewelry company, one of the public companies. They're selling diamond jewelry with it, so like donuts to diamonds. It's kind of like it's moving beyond care right now.
That's pretty funny.
We just saw a 38% growth in the quarter. That's our highest growth quarter in the history of our company.
So for people who aren't familiar with the actual technology, explain where they might have interacted with it. You mentioned a couple companies there. And what exactly they're doing when they're communicating. And do they know that they're not necessarily communicating with a real person?
Yeah, so like if you've ever been on Delta Airlines or T-Mobile or Citibank, you'll be basically, if you've messaged into using Apple Business Chat or SMS or even in their app, if you're messaging with them like you do your friends and family, you're using our technology. And sometimes there's automation there. So sometimes it's not a live agent, and we provide an automated, what we call a bot, or Chipotle. You can order a burrito now with a bot called Pepper and pick that burrito up at the store. So that's where you would have touched it. And we have 18,000 customers all around the world. So we do about 80 million people a month will be interacting on our system with one of our 18,000 customers.
Wow. So what's changed? I mean, you have a great, first of all, Rob, we've talked to you a couple times throughout the pandemic, and it's been great checking in with you because you do have a great vantage point. You work with a lot of different companies, different industries. From that vantage point, we were just talking about CEOs are not giving a lot of forecasts longer term, so we're not quite sure what happens after maybe the pop in the second quarter and after that. What would you say about the economy today and maybe out through the end of the year?
I mean, we're seeing, we have a lot of travel hospitality customers and some of the biggest brands in the world, from hotels to, airlines. And man, like they reduced their staff in some cases down to like nothing. And now they've had to overhire for the amount of demand we're seeing there. Retail, online retail, we have some of the biggest home building companies in the world. We're seeing a lot of action there. Home improvement companies, a lot of action there. So I think there we're seeing basically across our customer base a lot of movement. So it feels like things are bouncing back. Now, in our world, a lot just shifted to digital. So I think those brands that are really being digitally forward and aggressive and really changing how they were doing business during COVID are going to they're going to really get the real bang out of as we come through this thing.
So what does that look like on the other side in terms of how people interact with other people versus how they're interacting with bots? What do companies that are reopening or that have reopened need to be prepared for, the different way that consumers want to communicate? What do you see?
I think it's really like the retail. It's been really interesting in retail. Like obviously the retail physical locations got shut down. Now they're opening back up, but we're seeing such demand still in digital using messaging, allowing the consumer to have that personal experience. And that's what we need. Like we like to have conversations as people because it's how our brain works. We want to ask questions about products and we need that. So being able to provide that, especially in the retail area, I don't think it's about going back to stores 100%. It's about, yes, the stores will be there, but I can tell you the retailers we're working with, like this big jewelry company, like they have 3,000 stores in the U.S. The amount of money they've created an opportunity digitally now where they didn't think they could sell like this, sell a diamond necklace or a diamond ring, and they're able to do it. That's what they're really starting to see is that, oh yeah, we should have done this a long time ago. This is our future. We don't have to just rely on people walking in our stores.
You and I talked about this, I think, before. It was somebody during the pandemic that we talked with. It was kind of high-end watches, and they were doing virtual meetings with consumers to show them stuff, and shop that way. And personally, these conversational bots, I kind of enjoy it. It engages me, and I feel like I actually have some personal experience, Rob.
Yeah, and that's what it is. Like the version 1 of the bots a couple of years ago were pretty bad, but our platform and what we're able to do with it, and it's just the way we built the platform and the way we have the data and the way our customers can build their bots. Like Pepper, this bot for Chipotle, it's like you talk to it and you have this relationship and you build a burrito and it's cool. It's like it's not just like give us your burrito order, press 1, press 2. You converse with this.
Like there's a personality?
It has personality, and that's the cool thing is that the websites are all sort of the same when you think about them. Top navigation, a bunch of text and pictures. Every brand now can create a different type of, think about it, like it's almost like they put a live human, it's automated, but they create a personality for it. They can create, like when you enter a Four Seasons hotel, there's a certain experience they're going to give you with the person greets you. That's the same experience we can give with bots and automation.
All right, going to leave it there. It's a bot world.
It is.
Yep, that it is. Rob, so much fun to check in with you. Rob LoCascio, founder and chief executive officer at LivePerson. As we mentioned, reported earnings, and the stock was up today as a result. All right, coming up, looking forward to this. Scott Galloway, he is back. He's ours in just a moment.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
2 words. Scott Galloway.
I was going to say the dog.
I wasn't going to.
It's how he refers to himself on his Pivot podcast.
All right. Good stuff. I always learn something. I always feel enlightened and just thoughtful and walk away with lots of conversations with other people as a result of when I chat with him. So looking forward to it. We have a laundry list of what we want to talk about.
Yeah, and we have some time with him, so it's going to be good.
All right. First up, let's get a check on some of the earnings after the close. Here's Charlie Pellet.
2 words, earnings deluge. We got a lot going on. Let's get right to it because after hours, lots of companies checking in with earnings. MetLife says a surge in private equity investment returns fueled first quarter profit that beat analyst expectations. Etsy reported earnings per share for the first quarter that beat the average analyst estimate. Shares, however, are trading lower. Uber reporting a 24% increase in gross bookings in the first quarter, driven by continued growth in the delivery business. PayPal's first quarter adjusted EPS beat estimates. Fox Corp reported sales and earnings that beat estimates after a bump in TV subscriber fees offset a Super Bowl-related decline in advertising spending. Turned out to be a down day for NASDAQ, up day for both the S&P and the Dow Jones Industrial Average. Stocks almost wiped out in advance. It was driven by optimism over solid earnings and economic data as tech shares turned lower. Speaking of earnings out today, GM shares advanced 4%. What was driving the quarter? GM Chair and CEO Mary Barra spoke this morning in an interview with Bloomberg Television and Radio.
First, strong demand for our full-size trucks and SUVs. I mean, the Chevrolet Silverado, the GMC Sierra, the Escalade, the Tahoe, etc. There is exceptionally strong demand for those products, and so I think that's what's driving a very high average transaction prices. Because the demand is so high, we've been able to continue to be very disciplined on incentives.
Indeed, mixed day on Wall Street. GM shares, by the way, up by 4%. As for the market backdrop, Michael Sheldon, Chief Investment Officer at Hightower RDM Financial, he was our guest right here on Bloomberg Business Week.
I think if you look at some of the economic data, if you look at things like retail sales, jobless claims are finally starting to improve. Some of the housing data, the ISM indices, you can see they all point to a surge in economic activity.
The S&P up 2 points, up 0.1%. The Dow up 0.3%, up 97. NASDAQ on the minus side, down 0.3. 10-year yield 1.56%. Gold up 0.5, 17.87. And West Texas Intermediate crude down 0.6%, 65.29 a share. Bring on Scott Galloway. That's a Bloomberg Business Flash.
2 words, Scott Galloway. Thank you, Charlie Pellet. So in our world, there are folks that don't need any introduction. That really includes Scott Galloway, author of many books, The Four, The Algebra of Happiness, most recently Post-Corona. He's professor of marketing at NYU Stern School of Business. He has founded several companies, and he's host of the upcoming The Prof G Show right here on Bloomberg Quick Take. Delighted to have him back with us. Scott Galloway on the phone in Florida. How are you?
I'm great. Thanks for setting that impossibly high bar there, Carol.
No pressure there, Mr. Galloway. I'm not worried. So listen, we want to hit you on a couple of things. First of all, the Facebook news today, it kind of, I think we thought there was going to be a solution of Trump on or not the platform, and he's banned, but the company still has to make a decision down the road about ultimately long-term. What do you make of this news, and how should social be treating people like Donald Trump and others?
Well, they should be anyone who is responsible for a third of misinformation around a specific domain, in this case, election interference, should be banned from the platform. So, you know, this is Facebook's attempt to abdicate responsibility. This oversight board, I think, has got the charm of the League of Nations with the effectiveness of the United Nations. I think it's a total abdication of responsibility.
Yeah.
And what they said was, we're going to hurry up and do nothing. We're going to make it's kind of the mother of all non-decisions. I'm glad he's not back on the platform, but it's typical Facebook. It's kind of just more delay and obfuscation.
Well, Scott, how has it been so easy for Twitter and Snap to make their decisions about President Trump, but it's been so tortured for Facebook and for Google's YouTube?
You know, that's a really interesting question. I think Google and Facebook, to a certain extent, are still trying to hold on to this myth that they're just a platform. I think that they aren't niche companies. What's interesting is that there's definitely sort of a purity trade. And what do I mean by that? If you look at Pinterest and Snap, they've outperformed their peer group, and they're largely seen as having less noxious, toxic content. And Twitter, since kicking Trump off the platform, had sort of its strongest run in several years. So it appears there's sort of an immunity trade or a purity trade. I think Facebook and Google still want to try and cling to the notion that we want all content all the time, anyone, regardless of the damage it does, and they're still kind of holding to that kind of zeitgeist. They don't see themselves as niche players. I think they're less focused on pleasing any one audience. They'll be mildly upsetting to everybody.
You know, Sarah Fryer of Bloomberg News putting out a story saying that maybe Facebook has to provide more options for Donald Trump types, saying that there should be a way for Donald Trump, his thoughts, and other Trump-like figures to exist on social media without kind of all the amplification that many of these platforms provide. These are Sarah's words, to be fair. Do you agree with that there needs to be another option if we believe in freedom of speech? And I understand your point about misinformation, but how do we treat this, Scott?
Yeah, that's a tough problem, but I think we conflate freedom of speech with freedom of reach, and that is the conversation around anti-vax is a worthwhile conversation we should have. There are people who want to have a conversation around white supremacy, and those conversations should be had. The question is whether for-profit entities should have algorithms that purposely seek out that type of controversial, very upsetting content and elevate it exponentially beyond what it would get organically. Because it is so noxious, because it is so heinous, it creates enragement. And enragement equals engagement, which equals more Nissan ads, which means that Facebook gets wealthier. So the question is, should we have business models that purposely link profits to the enragement, division, and polarization of our society? Should there be some sort of tax? But this notion somehow that everybody deserves voice, these individuals have massive voice. The question is, should we, the most profitable companies in the world, be engaged in a business model where they end up being handmaids to sedition, or where a Capitol police officer is bludgeoned to death with a fire extinguisher because these algorithms are amplifying the most controversial content?
I always say to my teenage daughter, who's now, like, actions have consequences, and I do wonder, you know, we've got to kind of think about ultimately what happened. Hey, Scott, sit tight for a second. We're going to come back in just a moment. Got to do a little bit of news. Scott Galloway, professor of marketing, NYU Stern School of Business, of course, author of many books. As I mentioned, The Four, Post-Corona, The Algebra of Happiness. It's a favorite of mine. He's going to come back. We've got lots more to talk with him in just a moment. You are listening to Bloomberg Business Week. I'm Carol Masser, along with Tim Stenovic. So let's get out to Washington for a check on world and national news. For that, it's over to Nancy Lyons. She's in our 99.1 newsroom in the nation's capital. Hey, Nance.
Hey, Carol. President Biden says his administration is launching the Restaurant Revitalization Plan to provide $28.6 billion in direct relief to the nation's hard-hit restaurants.
Businesses that get grants can use it to cover payroll, rent, utilities, supplies. Everything they need to stay open and to reopen.
Biden says the restaurant industry really needs help, having lost 2.3 million jobs during the pandemic. U.S. Trade Representative Catherine Tai says the Biden administration is willing to waive intellectual property protections for COVID-19 vaccines. She also says the U.S. will work with the World Trade Organization to encourage other countries to go along with providing access to the life-saving shots. Well, in an effort to increase access to COVID-19 vaccines here in the U.S., the federal departments of health and housing are teaming up with community health centers nationwide. HUD Secretary Marcia Fudge says it's a way to reach underserved communities.
We're hopeful that by using community health centers to get into our public housing and to get people the vaccine right where they live is something that is going to be helpful.
Fudge made the announcement while touring a Washington, D.C. health center. It is no for now. Former President Trump will not be allowed back on Facebook. Today, the social network's quasi-independent oversight board voted to uphold his ban from the platform after his account was suspended 4 months ago for inciting violence that led to the Capitol riot. The board did fault Facebook, though, for the way it made the decision, calling it not appropriate to suspend him indefinitely. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, you are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. And we're talking about big tech, and we're going to get back to our conversation with Scott Galloway in just a moment. In the meantime, we do want to talk a little bit about, there's a story about Tesla losing a source of credit revenue that's been key to profits. And we were sharing this story around a little bit earlier. It's by our Tara Patel and Gabriella Coppola. Tesla about to lose one source of the regulatory credit revenue that's been crucial to its almost 2-year run of consecutive quarterly profits. And we're talking about Stellantis, NV. It's the automaker formed through the merger of PSA Group and Fiat Chrysler, announcing today it is exiting a European emissions credit agreement with Tesla. Complying with standards on its own will save the company about $360 million, roughly 2/3 of which would have gone to Tesla. This is something we've talked about a lot when Tesla reported earnings. These credits, when it comes to carbon credits specifically, it's a significant revenue line for them.
It is, and Tesla faces a couple challenges right now. One is getting margins up on its vehicles as the vehicles that it makes, as the price points go down, as it tries to get more and more people to actually buy the vehicles. One way it's doing that, of course, is by building a lot of those vehicles in China and then in other plants as well. The other part of it is something, I can't stop thinking about this, Carol, but when Tesla reported earnings, how much money the company actually reported making from its Bitcoin sale. And I'm thinking to myself, wait a second.
That's strategic to the business.
That's what I'm saying. That is it. Thank you. That is exactly what I'm saying. If you're a car company, should your bottom line be affected by a sale of a cryptocurrency?
Yeah, well,
should your earnings be affected by that?
Well, yeah, and I bet this is why when people say, you know, what kind of company ultimately is Tesla? How do you look at it? Technology company? Is it a battery company? Is it a car company?
Bitcoin mining company?
Yeah, and you know, we're all anticipating Elon Musk on SNL and you know what he's going to say, and you know, this is somebody who doesn't spend a lot of money on marketing and advertising. Yeah. He is, you know, the greatest marketer for his own company.
Well, you brought up Elon Musk and SNL, so I have to mention Dogecoin, and I you know, there's still people.
You know, there'll be a skit.
That's people think, hey, Dogecoin is going to go higher because Musk is going to talk about it on SNL.
No doubt. All right, we're getting back to Scott Galloway in just a second.
Headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Uber, among the names reporting after the bell, it did report a 24% increase in gross bookings in the first quarter, driven by continued growth in the delivery business. Shares, however, slumping now after hours, down by 4.6%. Turned out to be a mixed Wednesday. We had NASDAQ slumping 51 points, down 0.4%, a record for the Dow Jones Industrial Average, up 97 points. The Dow now at 34,230, up 0.3%. S&P little changed, up by about 3 points, higher by 0.1%. Stocks almost wiped out their gains as tech shares turn lower, offsetting optimism over solid corporate earnings and economic reports. Among those earnings reports today, GM advanced by 4%. 10-year yield 1.56%. Gold up $8 the ounce, up 0.5% to $17.87. And West Texas Intermediate crude down 0.6%, $65.30 a barrel. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. I want to get right back to Scott Galloway, of course, professor of marketing at NYU Stern School of Business, author of many books. And we talked about Facebook news, but Tim, we know we had stuff on Apple this week, too.
Yeah, let's talk about Apple versus Epic, and really a lot of big app developers and even small ones too. It's playing out in court. Epic Games accusing Apple and the App Store of cheating developers and consumers with fees and onerous rules. Scott Galloway, is Apple taking too much? Does Epic have a point here? Because at the end of the day, Apple's argument is, hey, we are giving you access to the customers, and we're making this a safe place for our customers to access your apps.
Yeah, I think that's the argument, that they've made a staggering investment to ensure safety, and they've made a huge investment in laying down the rails, and they should be able to charge what they want to access those rails. The question is, if you start seeing everything that's being transported on those rails, and you see that certain goods are going to a certain area, and you decide, wow, based on that insight, we'd like to start a competitive business, Apple Music, and we're going to tax our competitor 30% and maybe promote our own products, are you in fact in a monopoly position? The App Store really is their regulatory Achilles heel. I think they're going to lose on this one. Wow. I would have gone further than this. But it's very difficult to argue that they're not imposing or not taking advantage of the fact they own the rails to compete with the other products that access those rails. So if in fact there's monopoly power here and scale, and an argument that they need to have one player and that size is good for everybody, then they're a utility and their prices should be regulated. I think they're all wet on this one.
All right, playing a little bit of devil's advocate, and maybe it's not apples to apples, Scott, but what about a Walmart that, how it squeezes its suppliers, or an Amazon where it gets a piece of everything that's sold on its platform? I know it's not, like I said, maybe an equal comparison, but is it that much different?
Yeah, I think it is, Carol, because I think Walmart is about 8 or 9% of retail, and the App Store on iOS is about 80% of all dollar volume that goes through apps. Mm-hmm. So if you want to be a player in the app economy, there really is only one place, and iOS is where the majority of people go to actually spend money on apps. So if Walmart gets to 80% market share of all retail, then it's apples to apples.
All right. So listen, one thing, I wanted to ask you, Tim and I both wanted to, we were thinking about coming off of Warren Buffett and Berkshire Hathaway's annual meeting this past weekend. And Warren Buffett put up a slide. It was the top 20 market cap global companies in 1989. It was names like Toyota, General Motors, Exxon, IBM, 6 U.S. companies, 14 from other countries. He pointed out, Scott, that none of the 20 are on today's list of the top 20 market cap companies. And he says it's a reminder of extraordinary things that happen in 1989, not the dark ages, not a backward time. So I'm curious, how do you think about today's top mega market cap companies, whether it's Apple, Google, Amazon? You wrote about them in the 4. Should we think in 20 years from now, or I don't know, 10 years, they're not going to be the juggernauts that they are?
Well, look, a basic truism is that everything everywhere eventually ends. And at some point, these companies will be dethroned. The question is, what kind of damage do they do between here and now by not returning to our proud legacy of antitrust? And that is, AT&T eventually would have been unseated, but we went in and broke it up into 7 companies, and we unleashed tremendous innovation, cell, data, fiber. Each of those 7 companies ended up being worth more than the original within 10 years. So My argument is sure, at some point, everyone is dethroned, but between now and then, is there an opportunity to oxygenate the economy, to increase job growth, increase taxation, increase M&A by doing what we have always done, and that is when a company becomes an invasive species, we go in and we break it up. It's overdue. Antitrust is absolutely overdue here.
Which companies need to be broken up right now?
The answer is yes.
All of the above, right?
Right, but like, I mean...
Well, except for Apple.
Okay.
Apple would be hard to break up because elegant antitrust means you unlock value. It's not a punishment. It's a liberation for all stakeholders except the CEO who wants to sit on the Iron Throne of Olive Westeros, not just the King of the North. Apple would be tough because who would get rights to the brand? So Apple ends up, you regulate the App Store, but Amazon gets broken up, as does Facebook and Google. And by the way, I own shares in all those companies except Facebook, and we're all going to make money on the day of the breakups.
Talk about that, though. Is it because, AWS by itself is worth more than AWS as part of Amazon?
That's exactly the correct question. In 2025, the most valuable company in the world will be an AWS that was spun prophylactically. The fastest growing, largest player, and the most profitable, fastest growing sector in history, the cloud, will be the stock that every hedge fund manager, every girl who gets her bar mitzvah gets as a gift. Everyone will own AWS stock. Most valuable company in the world in 4 years is AWS.
It'll be an NFT, though, right? It's not going to be an actual certificate.
We're SPACing it, Carol.
I know. Well, you wrote about these 4 companies. I mean, who are the companies? Who are or what's the technologies that you think are going to be kind of the replacement for the Apples and Googles today? You talked about the cloud. I get that. Are there other things on your radar that you're thinking, listen, we're just not talking about it enough, but these are the ones that are going to be the big market cap companies of the future?
There's a lot of incredible companies and incredible technologies. The unfortunate thing is it's usually the same players. The biggest unlock coming out of the pandemic is we might have an opportunity. Virtual visits to doctors went from less than 1% to 30%. There's an incredible opportunity to start pushing out primary health care to hundreds of millions of Americans and take health care from a disease-driven defensive industry to an offensive health-driven industry. That's the good news. It's going to create trillions of dollars in value. The bad news, the company that will be the fastest-growing healthcare company in the world will be Amazon. Voice is the most exciting technology. Who dominates that? Amazon. The cloud, who dominates that? Microsoft, Amazon, and Google. So there's some incredible companies just off the list, the Shopifys, the Rokus, the Salesforces, the Alibaba. But these companies continue to outpace all the rest. The law of big numbers doesn't seem to apply to these guys. I don't know if you've watched Apple's earnings up 50+%, the revenues.
It's nuts.
The iPhone up 60+%, sales in China up 80%. Oh, and they increased their margins and their services revenue. It's just staggering.
Hey, Scott, I want to end just with a personal question to you. I know it's something that you think about a lot after I read The Algebra of Happiness. You talked about it with Jacqueline Novogratz on your podcast, The Prof G Show, a couple of weeks ago. About what it means to be a good parent. You asked her that question. And I know it's something you think a lot about, but as I'm raising my young son, talk to me about what you've learned raising a couple kids. We only have about 45 seconds left.
I was going to say, he asked you, and we got about 50 seconds.
Oh, gosh, we're going to need a bigger bus. So first off, if you drove by my house and you heard the screaming, you might not want to ask me that question. But look, I think the takeaway I've got coming out of this pandemic as a dad is that I always saw my role is to discipline and to teach and to back up mom and to set boundaries. And what I've come to the conclusion of is that what I need to do more of is just be someone who loves them and demonstrates and cements that every day.
We're going to leave it on that note. That's a great way to finish up. Hey, Scott, thank you so much. Take care of yourself and look forward to talking to you again. And always appreciate all the time you give us. Scott Galloway, professor of marketing, NYU Stern School of Business, author of many books. Check them all out. And he's doing things in education, too, with his Section 4 company. So highly recommend you Google that as well. All right, that's going to do it. What a show.
Yeah, it was a good show.
Coming up on Thursday.
Is it that time already?
It is that time.
Wow, look at that.
You have a good night.
Thank you. You too, Carol.
Everyone who's listening, for the whole Business Week team, take care. This is Bloomberg.